What's up, y'all?
Yo, can you hear us now?
Well, they can through my laptop, but not through our microphones, I don't think.
All right. Well, I hope you can hear us. Otherwise,
I'll let you know.
He's going to let us... What?
What? They can hear us now.
They can hear us now.
Oh, man. All right. Sorry about that, everyone. We are having all kinds of problems today.
Blame it on the snow. Blame it on supply chain issues.
Well, we were saying that you couldn't hear us, but what we were saying, we were talking about our adventures getting home yesterday and getting here today. So I was saying that I tried to beat the storm yesterday. You opted not to beat the storm.
Yeah, I left later. The roads were not good getting back, but I will say there was like no one on the road. So I was on the highway.
Yeah.
Snow and ice on the highway. I was slipping and sliding around, but there was no other cars on the highway, so that was good at least.
But you were slipping and sliding around.
Oh yeah.
Yeah. Me too, a little bit.
I also terrible planning on my part. I had to stop and get gas on my way home.
That's not good.
No,
that is
it was
not
like
good.
the last thing and 100 times out of 100 I would have like tried to make it, but I knew like immediately when I left the office, my car said like 0 miles remaining, and it's about like 20 miles to get back to my place.
Yeah.
Otherwise, if it was like
not good.
5 miles away and it said I had 0, I would have like tried to make it, but
yeah.
Yeah.
So this morning I woke up and I looked at the roads and they looked okay, and I saw it wasn't really snowing, and I thought, all right, I'm gonna brave it. I'm gonna make my way in it. And the roads really were not that bad, but they also weren't like that good. You know, they were kind of the same as yesterday.
Yeah.
A little bit dicey at a couple points.
Well, yesterday when I got home, we were like watching the weather, watching outside, and my roommate, he was being very bearish on the whole snowstorm. He was
right.
I know, and he ended up being right. I was like, I don't know, man. Like,
can I get Jack's stock picks next time?
He doesn't have those.
Oh, all right.
Yeah. I'll ask him.
All right.
I'll ask him to pick a
but so was Joel. Joel was bearish on the storm, and they ended up being right.
I know, he was right. I was wrong.
Yeah,
I was like, I don't know, man. I think it's gonna. And I was showing him the radar, and then every time, so we kept looking outside. There was no snow, and then you would like check your phone, and the percentages started going down. Like it started at like 100% snowing at 8 p.m., 100% snowing at 9 p.m., 100% snowing at 11 p.m. like all throughout the night. And then when I checked a couple hours later, it was like 60% 8 p.m., 70% 9 p.m. And then once the percentages started going down, I realized, maybe this isn't going to be as bad as people thought. But with that said, some parts of the country, like Chicago, got way more snow than we did.
So did like the out west too. Like Mitch was saying in Colorado, they got hit pretty hard.
Yeah.
But we didn't get it so bad. All right, enough about that. We got a lot going on today, everyone. As you gathered from the title of the show, we're going to talk about Facebook. That was a report probably for the ages. I was saying this morning, I've listened to a decent amount of reports in my day. Not like a lot, but not triple figures, but enough. And that was as bad as a call that I can frankly ever remember. We'll talk about that. We'll talk about Amazon. We got a lot of my friends over at Visible Alpha sent us over some really good data ahead of Amazon's report tonight. So we're going to look at Amazon here ahead of their report. We're going to take questions from our chat, as always. We're here to hang out with y'all. We got a lot of guests today. We got Luke Jacobi coming on. We got Vivi the Bio Queen at, 12:30 or so, give or take. We're going to be talking short selling with the TradeZero boys at 1 o'clock in about an hour, 20 minutes from now. And we're going to be talking to Tony Drockton, who's the founder of Hammitt, at 1:45. He's part of that Going Public series. So that's the plan for the day. Everyone hit that like button for us. Hit the like button for us making it into the office. I went home yesterday thinking we're doing the show from home tomorrow, which I hate doing. And yet
I
here
have
we
a
are.
confession.
What?
I wasn't going to do it from home.
You were going to just leave me?
I don't know. Yeah, maybe I was gonna go to like a coffee shop or something. Would have been fun, but I don't like streaming from my house. It's an invasion of privacy.
It's an invasion of privacy.
Well,
wow.
No, okay, that was a joke. But it takes away the separation of like home and work.
Church and state. I got it.
Church and state.
I got it.
Yeah.
Yeah.
There's an iron curtain between the two.
All right, everyone, hit that like button for us. Let's start the show. Let's roll that intro.
This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammitt on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a breaking news.
All right, let's start with this Facebook situation here, Aaron. Those of you watching, I'm sorry, we keep saying Facebook. Should we start calling it Meta?
No.
No?
No. Okay, and it all makes sense now, right?
It does. It makes so much sense.
Right. Looking back on it, it's like, all right, if everything's going groovy, if everything's good, you're not changing your name of the company. Zuckerberg saw the numbers declining in the Facebook, in the social media part of the business, and he said, hey, we got to pivot. We got to pivot fast. Hey, this metaverse thing sounds cool. People keep talking about it. They already had a head start with Oculus, so might as well dive deep into this. The problem with that is Zuckerberg himself is like, yeah, the future is very unclear. We don't know, really how long this is going to take for this to be profitable, if it will be profitable. I still do think there is a long-term bull case for Meta, for Facebook, and that's if it indeed becomes the leader or solidifies itself as the leader in the AR, VR space, and that gaming space continues to grow. I mean, there are projections that there could be 1 billion people playing AR, VR gaming by 2030. So if Facebook has, half that market or something, it could still be a strong company down the road. But bottom line is, most of Facebook's revenue, by a large margin, comes from its advertising revenue through Facebook, through Instagram. So it's still reliant on its social media numbers, on its user count. And this is what happens when a growth stock ceases to grow. I mean, for the first time ever, as Facebook reporting as a public company, did its users decline?
They didn't grow.
Didn't grow. They didn't grow.
No, they didn't grow.
I thought they saw a million decrease, and maybe not. Either way, it didn't grow.
Regardless, for Facebook to not grow its user base is unheard of. It's Facebook. That's the one thing you could always count on, was they add more users. Sometimes they get around a slowing growth by buying an Instagram, right, or buying a WhatsApp, right, and so they grow that way. But they're always growing. They never mentioned competition really before. And yesterday on that conference call, they mentioned the variations of the word competition or competitors. I counted 13 times. Yeah, TikTok, it's a thing. It's gotten into Facebook. Look at this chart from today. This is a chart. This is going back to here. Let's even zoom out a little bit more. Let's go back to the start of COVID, at least in the U.S. So let's go back to February 2020. You've basically given up. What is this? A year and a half's worth of gains in one day. Today. Look at the volume in Meta. I'm going to try to call it Meta because I, try to call companies by their correct name.
Big J.
Capital J, right. Look at the volume bar in Facebook. Look at how much volume is traded today. 108 million shares. The day's half over.
And just to be clear, Spencer, that's shares traded selling and buying?
Yeah. Mostly selling, Will. Let's be real. What happens when stocks go down? More sellers or at least larger sellers than buyers. So let's go to the 15-minute chart on this. I mean, hey, silver lining, you stopped going down for the moment, right? You can hang your hat on that if you want. I always think it's a good exercise to try to identify the positive and negative spin because stocks are all about stories. There really is not much positive spin here. I guess the only way to spin this positively is like, yes, Facebook saw this coming, and therefore they're pivoting to the metaverse for a reason. But can they execute on that? We're basically back to square one. This is an entirely different. This is a new company now. This is a new business. If last quarter is not an exception. Maybe last quarter is an exception. Maybe actually, I guess now it's the last 2 quarters. Maybe the last 2 quarters are just a bump on the road. If that's the case, then this is a buying opportunity. But if you don't think that, if you think the last 2 quarters of slowing user growth is going to be a prolonged trend, then and you think metaverse is the future, then we're basically back to square one here. This company now has to prove that they can execute again.
Yeah, and I mean, talking just on the social media side of the company, it's been no secret. I mean, it's been for 10 years now, basically a joke that, okay, like Facebook's not cool anymore. Your parents are on it.
Yeah.
And Instagram has kind of seen this. I mean, Instagram is still a younger person's game than Facebook, 100%. But it is seeing Facebook or Instagram's losing market share to Snapchat and TikTok.
Mostly TikTok. Let's be honest.
Yeah, and we talked about this the other day. We talked about TikTok cutting into Snap, and I made the case that I think for Snapchat and TikTok, because they serve different purposes, at least for that younger generation, that there is a space for both of them. But Instagram, I mean, Instagram's directly trying to compete with TikTok with Instagram's Reels feature. I mean, they're short videos like TikTok.
Yeah.
But at the end of the day, TikTok's in right now, Instagram's out, and people care. People don't care that Facebook has, millions and millions of retirees and 60-year-olds using it every day. They want the younger demographic. They want the younger demographic to be growing, which it hasn't been for Instagram. For Facebook, the writing's been on the wall, so I'm really kicking myself because I traded this yesterday, and I actually was trading on the upside into earnings, and I used basically I had made some decent profits from trading Apple into earnings, and then Google. I know Jay Rice and a couple people out there may have tailed me on that Google trade a couple days ago, and I basically used all my profits on the Facebook trade, which effectively wiped them out. But I'm not really kicking myself over it, because if you're going to be a trader, if you're going to, do this, especially if you're going to trade earnings, you're going to miss a few. You're not going to be 100%. I'm more just kicking myself because I kind of knew all this about Facebook and didn't really I didn't really take all into account. And I also, I have a newsletter I've been putting out every morning. Basically just like the top 3 headlines you need, little like 5-minute read. If anyone wants it, let me know in the chat, and I'll get you subscribed to it. But I even said in yesterday's newsletter, I said Facebook's has to deal with the fact that Google, Apple, and Microsoft all put out great reports, so they've set the bar really high. So even if Facebook does put out decent numbers, investors may trade it off because they didn't match the expectations set by Google, Apple, and Microsoft, and still, again, didn't take that into account.
Yeah.
If I would have played on the short side, obviously would have, should have, could have. Would have been like a 10x. I mean, those puts have gone crazy.
I believe it.
Because a 20% move was not priced into that was not the expected move.
Again, like the idea of Facebook not growing its user base, like not growing as much as estimates is one thing, but not growing at all from the last quarter is something else entirely. Real quick, Aaron, how do we find that newsletter that you just told us about, that you just teased for us?
Here, I do have a link. We're working on getting.
Well, wait, what's the newsletter called, man?
Ring the Bell.
Ring the Bell.
Spencer and I also have a daily podcast that goes out with it. Although I've been recording that one kind of on my lonesome the past couple days, Spencer.
Okay, I mean, it's your thing, man. You gotta let me know.
All right. But yeah, I mean, basically, it's kind of like a snacks style thing, but better than Robin Hood.
Yeah, I mean, I've been bearish Facebook for, I don't know, basically since the whole Cambridge Analytica thing came out. Was that 2 years ago now? I think that was maybe 2 or 3 years ago. I've been bearish Facebook for a while.
That was,
I own it. I own it because I own like the S&P 500 index, and Facebook is a large is a large piece of that. But if I could do a direct index, I would get Facebook out of my. But you can't really do it like that. But I don't like Facebook. I'm on it, but my account was deactivated for like a year, and I've only recently reactivated it. I'm not even on Instagram. I mean, I am, but I'm not. So
I think honestly the biggest question mark leading into this was how much of an effect was Apple's
that was certainly
privacy going to affect Facebook, and Google seemed to not be impacted by it too much, although I would imagine there's a difference. So essentially about what happened was Apple changed its privacy rules, so it gave users the option of not giving your privacy data away to platforms like Facebook, like Google, so then they can't use those. I mean, you remember we would see those highly personalized ads on Facebook. It'd be like, if you're Aaron and born in May, you need to buy this T-shirt. And I'm like, how the hell does it know all this shit about me?
Or you would say something, and you would see it.
Yeah, exactly. So Apple basically stepped in and said, we're not going to be a conduit for that. We're not going to allow that to happen through us. We're gonna allow our users to have greater privacy. So it brought Google and Facebook's ad revenue down. But yeah, I mean that's going forward now. The biggest question with Meta is how big will the metaverse be, and will Meta platforms be the leader in that, or if not the leader, a leader?
Yeah. So it's basically like an entire reassessment of that business overnight, which is
and a entire reassessment of my portfolio.
As you can see in the stock is reflecting that. Again, a year and a half's worth of gains gone in one day.
And I also think looking at the chart, there were some signs on the chart. I mean, if you look before Facebook reported earnings, all the other like big FANG stocks, save Netflix, have gotten pretty, close back to their all-time highs. Apple, I guess Microsoft is still off of it, but Facebook seemed to have not been trading as well as the other big name tech stocks. Of course, Netflix is an exception there, but Netflix actually been trading pretty well past up, down again, 4%.
So that's the other thing is like we talked about this morning as well. There is a big difference between a stock. Let's go to where's my pro? There's my pro. There's a big difference between a stock like PayPal getting crushed and a stock like Facebook, right? PayPal is a tiny fraction of the S&P 500. Facebook is one of the largest components. It's definitely in the top 10, right? It's a huge part. So you see the entire market down today, right? Blame Facebook, seriously. Blame Facebook for the stock market being down today. That's not an accident.
But speaking of this,
yeah,
can you pull up Bitcoin's chart real quick?
I can do that. BTC USD.
Can we go?
Yeah, you know me.
Can we go to like a 15-minute?
We're on a 15-minute.
All right. Can you go to yesterday at 4 p.m. Eastern?
Yes, I can. As I zoom very slowly. That guy? Right there?
Yeah. I mean, this just furthers my point. Like, Bitcoin is just trading with big tech at this point. Facebook reports bad earnings. Bitcoin drops 3%. I mean, come on.
Yeah. You're not wrong. Bitcoin is a proxy for the tech trade, the growth trade, right? The risk on trade. And if you see a major tech component get crushed like this, it's going to hit everything. And Bitcoin is tech. So, yeah, it makes sense.
And I mean, this is why I do think it is important, because I think this takes away from the argument from a lot of, Bitcoin bugs. Like, you have gold bugs, if you have Bitcoin bugs, that say it's a hedge. Like, how is it a hedge if it's going to trade down off of Facebook's earnings?
I don't know.
I don't know either.
I don't know.
So I think that it just takes away that aspect. I mean, I'm not saying I'm bearish Bitcoin or I don't like Bitcoin. I just that one utility, that one thing that people point to, saying, "Oh, it's a head, it's a head, whatever." People, the crypto people did used to say that if the market crashes, you're gonna wish you had Bitcoin, whatever. But I mean, we saw when the market crashed from COVID, Bitcoin crashed with it.
Yeah, that was a very interesting case study.
Yeah.
But yeah, I'm still in the camp that I think longer term, and I mean longer term, Bitcoin has the potential to be a hedge, but in the short term, absolutely not.
Well, you need to see this correlation broken, and it's not to say that can't, just because something's correlated right now doesn't mean it will be forever. But
right.
Yeah, I mean, absolutely. I was. I'm not gonna say I was shocked to see that. I saw Facebook and I was like, oh, I wonder what Bitcoin's doing right now.
Your point yesterday was well taken and noted today. My question let's go forward though. Now let's go back to the Facebook chart. Let's get off of Bitcoin for a second. Looking ahead, I don't think the pain is over. I typically, you see a stock trade on 25%. I'm definitely not trying to jump in and, either call the bottom or chase that move down. However, I could be interested in buying some puts on Facebook here, Aaron. Or if not Facebook, then at the very least, maybe we do this during the show today, Snapchat or Pinterest. Specifically,
See, I don't love puts on Snapchat right now.
Tell me why. I have not looked at the options chain. I don't even have my account open right now, so I don't even know what it's saying.
Because that bar's already been set. I mean, Snapchat's down 20% today.
I know. Typically I would agree with you, but I think the way the market has been the last couple of months, this is the kind of market that will punish you, and then come back for more and punish you again, and then punish you again. And when you think the pain is over, it's probably not over. I just don't think that...
I would not be surprised if that happens, if Snapchat reports tonight and it's down another 5-10% tomorrow. Yeah. But what I think is almost more likely is they put out a not so great report and say some of the same things Facebook was saying, talk about TikTok. But people are like, it wasn't that bad, like, whatever. I mean, Snapchat's down 50% over the last 3 months alone.
Oh, really? Let's go to a daily on this chart. So I've got Snapchat and I've got Pinterest. Pinterest is the purple line. Snapchat is the candles. So let's just go to the last few months here. Yeah.
I just think that move, I mean, if you were going to play Snapchat puts, I think you should have done it yesterday, in hindsight, now that stock's down 20%.
I think that the report, yes, the bar is low. I think the report will probably be bad. I think the report will almost certainly be bad.
Okay, speaking of this,
for both these companies,
let's do another company out of a different space that's reporting today. Clorox.
Oh, okay, that has nothing to do with this. Tell me, are you in Clorox here?
Well,
this is the exact opposite.
No, so Clorox is reporting today.
Yeah.
And like Snapchat, here's the relation.
Okay.
Clorox has set the bar very low.
Wait, what? Oh, you mean like in terms of the stock?
Yes.
Oh,
like go to the go to the calendar here and go to the earnings.
Yeah. Okay.
And look at its past few quarters and what's estimated for today.
Okay,
I believe around like 50 billion or something.
No, 50. What? No, in Clorox, no, 1.6 billion in revenue is the estimate, 84 cents per share on the earnings.
But compare that to the previous quarters.
Okay, so we're looking, we have to always go year over year. So the estimate is for the last quarter to have actually been a worse quarter than the prior year.
Right.
Revenue down, and bottom line earnings higher, but top line revenue lower is the estimate for right now. But let's just go to like pre-COVID 2019.
So here are the going back to.
Still above pre-COVID levels in terms of revenue is the estimate for tonight.
I mean, not going back to...
I went back to Q2 2020. I'm sorry. Yeah, that report from February 4th, 2020. That was pre-COVID.
February 4th, 2020.
Yep, they reported...
okay, but if you go back 2 quarters before that, they were...
No, but you have to compare it. You have to compare
the same quarter.
The same quarter. Yeah, you have to compare a Q2 to Q2, a Q3 to a Q3. So a Q2 of 2020 here, I guess, from the report from 2 Q2s ago, they made EPS of $1.46 and revenue of $1.45 billion.
But going back to Q3 2020, which is what they're reporting. Okay, no, Q2 today.
Why are my columns all out of order?
Okay.
Here? Hold on. My columns are out of order.
So, yes, same quarter last year, they were estimated more revenue
I'm fixing,
and a higher EPS.
What's going on here? My columns are all out of order. So, I estimated revenue.
But, I mean, okay, so this would be the first
EPS, there we go.
estimate for EPS below 1 in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 quarters.
Yeah.
More than that.
Yeah, I mean, like they got a huge COVID boost, right? So that's not going to sustain itself.
But I'm saying even going back well before COVID, the EPS was, which I know EPS isn't like the greatest metric out there, but was well above 1 every single quarter, the estimated EPS, and now it's 8.4. I think it's just a sign of a declining growth, declining revenue. Okay,
so going back to the chart though, what was your point? You were saying the bar is low.
The bar is low,
but. Now, I'm confused whether the bar is low in a good way or a bad way.
That's the question. I mean, I think they put out not so great numbers, but they've already kind of indicated that. I'm looking at Clorox puts here because if you do get like a 5% drop on a stock like Clorox, the puts pay out.
5% of Clorox would be a big move, I think.
Right, and we've seen a few of those with the other earnings reports in Clorox, but the price, it's not priced. I mean, these tech stocks like, Roblox and Snapchat are expected to move this much. Clorox isn't. So I'm looking at some puts on Clorox, and actually here, I'll share my screen real quick on my Robinhood, and we can look at the options chain. I was looking at it, and I was like, who trades Clorox into earnings? And I scroll down on my history.
You did.
Oh, I guess I did.
I did.
Same quarter last year, January 26th. I bought calls. I bought 5 contracts at $240, Spencer.
Yeah.
Sold them at $13.20.
Oh boy.
So that's what I'm talking about. Is we got a big move at the same quarter last year. Granted, it was to the upside, not to the downside. And those contracts paid out very nicely because there's not as big of an implied move, but then you get that move. And it's great. Someone was asking me to compare Colgate's earnings to, when did Colgate report?
Colgate Palmolive.
Oh, Colgate reported today?
No.
Recently.
No. Why? No, they're off cycle, I think. They reported. Oh wait, no, they reported last week. They reported last week.
Yeah.
They reported. So if we look at the calendar here, and
I'm pulling your screen back up real quick too.
Let's just look at like what they said for their last quarter, how that compares. So this is Q4 of 2021. Revenue $4.4 billion. That was higher than the prior year, which is higher than the prior year, higher than the prior year. So their revenue is increasing, and the bottom line earnings here, right? 79 cents, 77. Go back 2 years, 73, 74, 75. So yeah, their last quarter for them was a better quarter than the same period in each of the last 10 years, basically. So that's how far back our data goes, 10 years. So, so the point was that unlike Clorox, Colgate at least seems to be growing. I think that was the point in bringing that up. How's the chart doing though? I have no idea. Oh. All right, you know what? Let's actually stack them up. This is one of my favorite things to do, is just stack charts up against each other. CLX versus CL. Yeah. I mean, that's not an accident.
So how did Clorox, or how did
if Colgate is growing and Clorox is not, the chart reflects that.
How did Colgate trade after earnings?
I'll have to go to a 15-minute chart here because they reported on when, the 28th? I think, yeah. You can see that I think that overnight gap is probably their earnings report. So it opened lower, but it came back that same day. Looks like the stock closed at 82 prior to the report.
Yeah, Clorox and
we're basically back to where we were pre-earnings.
Clorox and Colgate, they're in the same sector. They're consumer staples.
Yeah, they're both household items, bathroom items, toothpaste and Windex and all that good stuff that everybody needs to buy. Toilet paper, right? All right, so we don't have any active trades on either of those, but you're considering it.
I am. Let's look.
Okay.
Let's take a look. I'm going to put my screen back
and
up.
By the way, Hot Stocks Luke Jacobi should be joining us.
Oh, I did.
Any moment.
I have to disclose this before Luke comes on. I asked. I kind of got Luke into the Facebook trade with me yesterday. Before it closed.
That's why he's not here. He's licking his wounds.
He is probably not very happy with me. Although I would have felt worse if I was like, oh, here's this trade, here's my thesis on it, yada yada, and I was more just like, I'm gonna YOLO some calls into Facebook, and so he knew it was
okay.
That's all it was. Okay. So at the end of the day, when he comes on and tries to blame me for it, you guys just got to let him know, hey man, that was your call to do that, not AB. All right, let's look at Clorox Options. So we report tonight. I'm just gonna look at the ones that expire tomorrow. I mean, you could, to be a little bit safer, look at the February 18th, the monthlies, because if we buy these, say 160 puts, if Clorox opens down tomorrow, but not down 5-10%, then we're fine with the monthlies. But anytime I'm playing earnings, I'm just gonna do the closest expiration date. So we're looking at
nice way to be. General rule of thumb: when in doubt, go soon.
Yeah, I mean, look, it's like a binary. This is a
binary option.
Yeah, we're doing binary options. It's either going to be down and we're going to make money, or it's not and we're going to lose all the money. So, wait, these are. Oh, I'm looking at the calls. I was like, these are more expensive than I would have thought. All right, 160. All right, so let's say we get a 5% drop. That'd be about $8. That brings us down to 154. 5% drop may be a little too much expected, so I'm gonna go. Let's go. I like this 160. So all we need is a $6 drop. 125. Yeah, MDK. I think that's fine. I think that's fine. I think that's. I've thought about doing the same thing, just inversing all my ideas. But yeah. All right, what do you guys think about this in the chat? 150 or $160 puts cost us about 123. Zunaid, let me know what you think. Okay, Fred, we'll get back to the overall market. We're just looking for trades we can put on. Yeah, Quantum, I know the calls are cheaper. I think that's almost a good sign here on the downside. All right, I'll hold off on this for a second. We'll see what Luke thinks. Let's go back to Benzinga Pro and take a look at what's going on with the overall market right now, because we did see a little drop both in SPY and in the Qs. So Zunaid, I was just asking if you had any opinions on the Clorox trade going into earnings today, but we're pulling up SPY real quick. So here's the best thing about Benzinga Pro. View the chart right here, but then right below you've got the advanced news feed and the details tab. So any pertinent headlines to the security you're looking at, whether it's SPY, whether it's an individual stock, you can see these headlines right here. So you don't need to go to Google and say, hey, what's going on with Facebook? What's going on with Apple stock today? Now we can see it right here. It's really... It makes it a lot easier to trade, because before I had access to this, I was going around to like 10 different tabs on my thing every single time when I was looking at a stock, because I wanted to see the news, I wanted to see the financials, I wanted to see the chart. But now it's all in one place. So if you guys haven't tried this out, I'll drop a link in the chat. You can sign up for a 2-week free trial, no credit card needed. So really no reason not to just check it out for a couple weeks and let us know what you think. pro.benzinga.com. Go ahead and sign up for that free trial. And now I'd like to introduce our very special guest, Mr. Jacobi.
All right, what is going on, guys? Happy Thursday.
Thursday.
All right, let's get into it.
First things first, Luke. Let's talk about the Facebook trade.
Yeah, that's what I was about to. Okay, we're getting right into it. All right,
I owe Luke an apology.
Yeah, did we talk about that yet?
I talked about my trade and how I screwed up, but I wasn't beating myself up over it, because I was on a hot streak where I played Apple's earnings correctly, I played Google's earnings correctly, I played Microsoft's earnings correctly, and I basically just used a lot of those profits on the Facebook trade. And if you're going to trade options into earnings, you're not going to get every single one right.
All right, so I've been following Producer AB into sports betting picks. It's been horrible. Yesterday, I let him tell me that we should buy, what was it, 350s?
We bought Facebook calls. We bought different strike prices, but the idea was the same, right?
Okay, so we bought Facebook 350 strike calls expiring tomorrow. Stock's at 241 right now. At 4:05 p.m. yesterday, Eastern time, right? This is right when earnings is coming out. I was on a call with somebody. Said, I'm not looking at the chart. So give me a direction. Is it up or down? He's like, way down. But we bought one contract in it, and it was for fun. But now let's get into the serious part of how do we trade Facebook with this new information that we have today. But go ahead. What's your and?
I was just going to say, I would have felt worse had I been like, hey, Luke, here's this trade. Here's my thesis. I did all this research. I was just like, hey, I'm going to YOLO this. So.
Yep. So can I share my screen? Can we
Yeah.
do you mind switching it over?
Of course.
Or do I got to do something?
Yeah, you're Benzinga Pro, Facebook right here.
Let me do mine, okay?
That is yours.
Oh, it's not.
Oh, no, it's not. That's Spencer's. I thought you were using...
All right, there we go.
There we go. All
right. So Facebook, obviously off 25% today. Let's do a quick check through the numbers. I'm going to click over to the guidance, okay? So whenever we get an earnings report, the guidance, the amount of money that a company expects to make in a future period is always more important than the money that they made in the previous period. So Facebook gave us a preview. They said for the first quarter, so that's the quarter that we're in right now, right? We're 1 to 3 months through that first quarter. The company is going to make somewhere from 27 to $29 billion. If you annualize that's right around $120 billion of revenue a year. Take their market cap today, which I believe it's down to somewhere in the sixes. I did the math before I hopped on. That means that Facebook's trading at about a 5.5 times forward price to sales ratio. Let's go ahead and check out the bottom of the income statement. So let's go look at Ebitda. And we don't have an Ebitda figure here, so we're going to use net operating income. The definition of net operating income is going to be the amount of money that the engine of the business drives. It's going to be substantially similar to an adjusted Ebitda number. It's basically you take the core engine, you throw out any money that was made or lost in interest or in corporate treasury, you throw out tax. Here's how much profit the business is driving. You annualize that 10 billion there, you get to about 40 billion a year. That means that the stock is at about 17 times EV to EBITDA. So we have two numbers that we're looking at. We have their forward price to sales at 5.5. We have their trailing EV to EBITDA somewhere around 17. Valuation is okay. It's not like this is a steal. Netflix got into steal territory a couple weeks ago. We loaded up on Netflix. We're not yet into steal territory here, but valuation is fine. And if we go ahead and we take a look at revenue growth over time, right? We can't pretend that Facebook isn't putting up great numbers. I mean, I'm just going to zoom in here. This is revenue per quarter over the last several quarters. I mean, pretty significant revenue growth. The revenue number that the stock is getting killed on today, right? That guidance number, they said they're going to make somewhere around 28 billion in the first quarter. Yes, it's a decent bit off of the Q4, the quarter they just reported, but more or less, I mean, it's still an incredibly strong quarter. It's going to be tied for their second and third strongest quarters ever, which just took place in the previous year. Because valuation is okay. And we're still going to get a strong quarter out of Facebook. I sort of like the stock down here at these levels. So that's the valuation side. Now let's talk about the story side. Whenever I pitch a stock, I like to talk about both the valuation side and I like to talk about the story side. Here's the story side of it. There's a chance. I think there's a lot of. Actually, let's ask this one to the chat. If you believe we are due for a period of prolonged bear market, let's call it at least 3 months. Throw me a 1 in the chat. If not, throw me a 2. I'm curious where everybody's at. But we are in this situation. I'm not calling for a bear market, but I'm saying that we're in a situation where we absolutely could hit one. We could be experiencing one. The amount of chop that we're seeing in the indexes and the individual names, a lot of these massive individual names, makes me nervous. But if we are approaching a longer term bear market, Facebook is going to be viewed as a defensive stock. Right? There's going to be a rotation out of a lot of these other high flyers. And Facebook is going to be one of those names that people are throwing in there that says, hey, this is a safer stock. It's a cash cow, yada, yada. We still want some exposure to tech. We're going to rotate into some of the safer tech names. All right. So you have the valuation looks okay. Not a screaming buy. You have that defensive narrative that's coming up. And so I sort of like Facebook down here at this level. I have not I've had a long-term position in it. Let's say like a 7-year position, something along those lines in Facebook. I have not taken a new position in this one yet. I don't like that the stock is trading pretty much down to the low of the day right now. Let's see a bottom come in. Let's see a handful of green candles go the other way. But when it seems like that downward momentum is stopped, I think that Facebook is interesting here.
I agree. The only thing I would say on that is I'm sitting on the sidelines for now because what we've seen over the past few companies that have had big earnings drops like this, like pull up a Snapchat or pull up a DocuSign.
I'll give you another one. So here's Snap.
So after that big earnings drop, a lot of people went in there buying it, and this isn't the most recent one on this. This is a 2-day chart.
Here's a 1-year chart.
That's from Facebook's earnings last night. That's the drop I'm talking about. A lot of people came in there buying it up, saying, hey, Snapchat's not worth 20% less than it was a day ago. And the stock continued to trade lower. So I would wait to see if Facebook does something similar. Same thing with DocuSign, did the same thing. But Luke, I have another name that's been beaten down.
But let's not move off of that yet. So I hit a pretty decent lick last week on Netflix. I'm still in it. I've given up, so definitely some decent amount of cash over the past 2 days. But I bought Netflix on this day. If you can see the candle that I'm looking at here, right? It was the same day that SPY was down 5% intraday. I have an average price somewhere around $355 on it. Stock was killed off of earnings, and I made a similar sort of pitch that I'm making for Facebook now, which is Netflix was trading down to 5 times price to sales on Netflix, right? Let's go ahead and pull up a chart here. Look at this revenue growth. Steady forever. And you're going to tell me this should be valued at the same rate that the average S&P 500 stock is valued at? I mean, it was the first time in my life I've ever owned Netflix. I wasn't in agreement with some of these nosebleed valuations that we had. But when the stock was down to 5 times price to sales, you know, I loaded up on it. And I think that Facebook could be a similar sort of situation. And with Netflix, what happened, we also saw that Bill Ackman, Pershing Square, got into it. We saw Reed Hastings, the founder, bought $20 million of stock. I think Facebook could be another scenario.
I don't disagree at all. I just, my personal preference would be to wait to see in the next coming weeks, do we get that immediate move up looking for that gap to fill, or will we continue to trade lower?
So let's ask the chat about this one. Facebook, ticker FB. AB and I, producer AB and I, we agree on almost everything except for who we want to win the Super Bowl and Facebook. What's the opinion of the group? If you guys like Facebook down here at 240, put the 1 in the chat. If not, put the 2. Curious where everybody's at. Yeah, should we also mention the stock gave up almost 2 years of price appreciation?
Yeah, we did mention that earlier. Whew. Yeah, 1.5 years gains out the window.
I have another one, too, that I'm looking at. Do you want to go to that, or do you have something else?
I have something else before we get to that one. Maybe they're the same stock. Who knows?
Okay.
We also do have Ford earnings today. We got a lot of things to get to. All right, let's do rapid fire next 4 or 5 minutes. I have 2 stocks I want to hit on. We have yours. Then we also got to talk about Ford.
Okay.
All right. First one I want to talk about, Twilio.
All right. What about it?
You want?
I had to ask Spencer something.
Okay. Twilio. Let me pull this up on my Benzinga Pro. The stock, like many other big, we have other. So Twilio, like other tech stocks out there, has just gotten absolutely decimated the last 6 months or so. If we go back to all-time highs back in February, almost a year ago, February 2021, Twilio was trading at about $450 a share. It's currently at $182, 60% off its highs. This is why I think Twilio is interesting, right? If we pull up the calendar here in Benzinga Pro, we look at the earnings, we look at revenue. Every single quarter, Twilio's revenue has about 8 quarters ago. Twilio's revenue was $300 million. Now it's $750. Twilio's revenue has been consistently growing quarter over quarter. We look at the estimated revenue that's coming for their earnings next week. The estimated revenue is $767 million. Compare that to Q4 of last year, $454 million. They've almost doubled the revenue for year over year in the same quarter. And yet the stock is trading more than 60% off those highs from when the company was reporting the same quarter's earnings a year ago. Again.
All right. I this has to be said, okay? If you or anybody out there are buying these tech stocks into earnings right now, I mean, hats off to you. Or do you have a stomach of steel after what we've seen? Do you not agree with that?
I agree. I just think
they've all gotten destroyed. I mean, it's been crazy.
I just think at some point Twilio becomes interesting as
I don't disagree.
So
I'm just saying you're buying it
buy
into
it before
earnings.
Maybe we wait till the earnings. But I mean, isn't that insane? 450 million Q1 last year versus 7. I mean, they've doubled their revenue in a year, yet the stock's down 60%. But with that said, it had no business being a $450 stock to begin with.
The stock, yeah. So it's still expensive, right? So let's look at Twilio. Twilio, we analyzed their most recent quarter. The stock's still trading at about 10 times price to sales ratio. We compare that to the Netflix trade that was at 5, so half the valuation. Facebook's at about 5.5 right now. So I don't know. It's at least it's pulling back into earnings. But I mean, some of these stocks, and we're not talking about 5-7% sell-offs into these earnings reports.
No,
these are 25% moves.
Rain in the chat says about Vivi. Vivi will be joining us in about 5 minutes. We're gonna get to some nice biotech stocks with Vivi, so stick around if you're here for Vivi. All right, Luke, let's wrap. Let's bounce it back to you. What is your stock?
All righty. Let's throw this.
Pulling your screen back up.
Give me a second.
All right.
Okay. The ticker that I'm going to talk about is PayPal. Ticker PYPL. Does anybody know that one?
Oh, we're really bottom fishing, huh? We're trying to scrape the bottom of the barrel.
We're trying to bottom fish. Absolutely.
We are trying to catch those falling knives. PayPal.
All right,
now
throw it up. Throw it up now. And what's the move today? I've not taken the position yet. What's the move today? Do you know what the stock movement is, AB?
Down 5%.
So down another 5% today. All right, so this was yesterday, midday, when the stock was getting hammered. I did the quick math in it. Stock was getting killed on guidance, okay? The company announced pretty poor guidance. Stock got smoked on it. It was down 25% when I was looking at it intraday yesterday. If you take that guidance that they gave us for the upcoming year, it means that the stock was trading at about 5.3 times price to sales ratio. Again, if we want to talk about the S&P 500 average, let's say that it's 4.5, somewhere in that ballpark. Should PayPal be trading like the rest of the S&P 500, right? Think of all of the companies, all of the big industrial companies, your oil companies, your financials, et cetera, that are in the S&P 500. Should PayPal be trading there? It's got pretty nice margins. Revenue growth is great. And again, just like we talked about with Netflix, just like we talked about with Facebook, it gave up 2 years of price appreciation. I'm going to click us back over to the chart now. So the reason why I don't have the position yet is for the same reason why I said I don't have the position in Facebook yet, which is that I want to see a couple green candles here, right? When the bleeding starts, who knows when the bleeding is going to stop? So I could have bought it yesterday. I chose not to. We're down to another 5% today. If we rally into the close, maybe that's my time to get in. Otherwise, I'm sitting in my hands and I'm going to wait to look at it again tomorrow. We're at low of the day today. I'm not trying to buy at low of the day. Again, when the bleeding starts, you don't know where it's going to stop. And this stock is right at or right below, that 5 times price to sales. And Shelly's calling it. I've definitely been a dipper. I've definitely been a buy the dipper. Baba is another one. Have leaps in Baba. Still feel good about the Baba leaps.
And we're going to see Baba move tonight off Amazon's earnings, I predict.
That's very fair. Very, very fair.
Someone asked about Amazon earnings plays today. We can look at some. So this is what I did with Google.
Wait, can I ask about this one? So that's the quick pitch, right? I could talk about PayPal all day, but that's the quick pitch on PayPal. Again, not in it yet, waiting for some of the bleeding to stop. But if you guys like PayPal at this level, at 125, throw the 1 in the chat. If not, throw the 2. Curious where everyone's at on this one. And then, sorry, AB, you're about to dig into Amazon earnings.
Well, so before Google's earnings, we were talking about how to play it, and I did some call debit spreads, and I like doing the spreads when the stock is very expensive. So something with Amazon, we'll take a look at some spreads later in the show, but I also think playing Baba is a great way to play Amazon's earnings because at least for the e-commerce shipping part of it, right? If Amazon reports great numbers on that side, Baba will probably move up. If it's underwhelming, Baba will move down. The AWS side, which is a growing part of Amazon's business, obviously not as relatable strictly to Baba, although they are doing some things kind of similar there. But that could be a little way of a cheaper way to play Amazon's earnings with the stock being so expensive.
Yeah, and I like a lot. So this is a 2-day chart that we're looking at right now. So it's a full session, pre-market through regular hours, and then after hours, and then pre-market and regular session today of Amazon. I love that the stock is down 6.5% into earnings.
Yeah, the first thing that Luke,
thank God.
The first thing that Luke said to me yesterday when I asked him about, or I told him, I said I'm YOLOing Facebook calls. He said, is the stock up or down today? So I don't know what your thesis is there, if the stock is up or down, if that has any indication.
Well, like I was just saying, anybody who's buying any of these stocks into earnings right now, any of these higher flying tech stocks, has got a stomach of steel. Because these are not 5-8% moves. I mean, these are 25% moves over and over and over and over again. Like I'm glad now that it seems like the market is pricing in some of that ahead of the earnings report. So even if they come in line, maybe we get a nice little rally out of the trade.
All right, Luke, I got one more stock I want to look at on Benzinga Pro real quick.
All right, hit me.
Array Technologies, ticker ARRY.
Right.
And this is a stock that if you've been watching us for a while, I made a lot of money off this, playing this off of, it kind of bottomed out at like $13 over the summer and then ran all the way up to $27 and is now down to $9. So what this company does is they have patents on the technology of solar panels that can help the solar panels optimize their retention of energy from the sun. So they'll essentially move the solar panels around so they're like facing the light. And any major solar panel manufacturer provider uses Array technology like behind the scenes. So it's a solar play. But what I'm looking at is just from a value perspective, the market cap right now is like $1.5 billion. The company did $800 million in revenue last year. I mean, I don't know how that checks out. Like I must be missing something for the company to do that much revenue in a year and for the market cap to be less than 2 times the revenue of the company in a single year. I was looking at this and I was like, I got to be missing something. Like something's not adding up here. Otherwise, this is like an easy deep value play.
So I'm looking at cash from operations right now. They burned. So I agree, right? Those headline numbers look good. The next step for me when I'm looking at these stocks is then I look at cash. So cash from operating last quarter, $31 million lost, 91 for negative 42, gain of 100. Oh man, that's bouncy.
Yeah, and their revenue numbers and quarters are weird because they have a lot of like government contracts that will come in like one quarter for like a year. Then so the numbers can look a little weird when you're looking at the quarter over quarter. So I was going annualized and I was just like looking at the revenue growth over the last 3 years. Yes, the company's spending a lot of money, but a lot of these companies that are in early stages tend to do that before they ever see a return. So
and this just took away one of my big risks. So check this out. The number that I've highlighted on the screen right here is cash on the balance sheet per the last earnings report. 116 million. It was down to 17 million before that. So my initial thought, producer AB, and why I was looking at the cash flow was maybe there's a cash issue and they're going to have to do some dilution, right? And maybe that's being priced into the stock right now. But the fact that they already went through that, and they should have ample cash. If we're talking about they're burning $30-40 million a quarter, that should give them ample cash for at least some period of time. It's not crazy. It's not like they have a 4-year runway, but at least a decent period of time. This could be interesting at first glance. I don't know more about the business than what you just talked about and what the numbers just showed.
Yeah, and Talk to Me Goose just laid out what the company does in a little bit more articulate terms than I did. They make a photoelectric sensor that optimizes the panel's angle toward the sun. Again, basically every major solar company is using Array. So you have that growth aspect. You have potentially the value aspect. That's why I wanted to bring it up with Lucas, because he's better than I when digging into those numbers, seeing any glaring weaknesses or strengths. But all right, let's move on. Leslie's Pools. Luke, this is an old favorite.
So saw someone in the chat talk about this one. Idea for this stock, I do like this one. Idea for it is that valuation is fine. I don't think there's a ton of valuation risk. We had some really big storms that could give them a spike higher in a quarter. And then we have the Ted Cruz Classic coming up, which is Texas is maybe going to freeze. Well, he's headed over to Cancun. Sorry, I just had to make Spencer Israel laugh. I think it's fine that he went on vacation. Everybody needs to go on vacation. But Spencer Israel is nagging me now. But you do have that upside surprise there for the Texas storms as well. I don't know when those are supposed to hit. I think it's within the next week or two. But I do sort of like Leslie's as a play into earnings. It's just scary to hit anything into earnings right now. So again, it's not 5-8% moves we're talking about. These are 25% moves.
Yeah, and depending on how you're trading or investing, you almost want some of these names. Like, I would almost love to see Amazon come down further so that I can scoop up some shares, or at least some partial shares for Amazon for the long term. But again, if you're scared, if you have a uneasy stomach trading some of these stocks and earnings, just wait. There is nothing wrong with saving some cash on the sideline, waiting until some of these companies report, seeing how the overall markets will react, because I think there are some things to, that potentially we could see another 10% drawback in the overall markets, but could we be back at all-time highs in a month or so? Sure. I don't know. I don't think any of us know for sure, but yeah, some good deals out there, but you got to be careful.
Mm-hmm. All right. Time to wrap, Spence.
Yeah, someone in the chat was asking about if they can download Benzinga Pro to their PC. It's all browser-based, so that's one of the best parts. You don't need to download anything. Again, free 2-week trial. I'll drop that link in again. No credit card needed. No reason not to sign up. Oh, Luke, the Texas storms are hitting today. Someone in the chat said.
Let's go.
So if we want to play Leslie's, we gotta do it today. We gotta do it soon.
What's going on here, Aaron?
What's going on?
Yeah.
Waiting for yeah.
We got Vivi here, right?
Oh yeah, let's go ahead.
Did you forget?
Well, I was waiting for you to come back on, Spencer.
Oh my God.
All right.
I'm sorry, Vivi. These people.
If you guys are here for biotech stocks, we've got the best person to talk to about biotech stocks, Vivi Biotech Queen. You can find her on Twitter. I'll go ahead and drop her link in there. But without further ado, let's go ahead and play our special intro. Bring Vivi on. Vivi, how you doing today?
I'm cold. I know it's not that cold. It's San Diego, but my house is so freezing today. So I have my sweater. I'm all like bundled up.
Can you see behind us? There's snow outside. Can you see that?
Oh yeah, I can see that. Yeah.
So Vivi, first
freaking who?
First things first, sorry for the delay getting you on today. I know we had a lot of people in the chat waiting for you, a lot of people excited for us to bring you on. So that was first things first. But second things second, did you trade Facebook puts into earnings yesterday?
I did.
Oh, we gotta talk about this before we get to biotech.
I when it was 3:30, I got a 260 puts for 75 cents, and I only bought 5 calls. I don't know why. It was $375 bet. I usually gamble with 1,000. I don't know why. So my buddy got 50 calls. So he spent 3,500, made it 249,000. I spent.
He made $249,000
out of 3,500, and I made it 10,000. When I closed when I saw it going down, and like with that first green candle I sold, I could have like even made more, but I made 10 grand out of $365.
So who's this friend? He had just alerted you, hey, I'm buying these Facebook puts?
Yes, we trade together. We do live trading together on a voice, and he's like, I'm grabbing this as a lotto, but he has a much bigger account than me. His lotto was 50 calls and $249,000 later. It's just nuts. And I'm always like, I could afford 30 calls, even 40 calls. And I don't know why
Yeah, it's always easier in hindsight. Did you say you had some lotto calls too?
No, puts, just puts. I'm sorry.
You only had puts. Okay.
Yeah, I only had puts. It was because it was 75 cents, not because we believed that was gonna go that further. It was a completely luck.
Yeah. I mean, it's always fun when you hit those. You got to let us know next time. You got to text me.
Like 2,000%. It went crazy. Yes, I'll text you. And then, I saw you guys segment on Facebook. I would be leery. Trump Truth Network's gonna come, and I believe they're gonna take a huge chunk of business from Facebook. They will. I mean, I feel like Facebook is so biased to the left that a lot of friends that I know that they're conservatives said that they're all moving over to
Vivi, the largest groups on Facebook are all conservative platforms.
Yeah, I mean, so I don't know. I mean, I had a friends also that bought $300 calls for March and made a 50% on their premiums and sold today. They just kind of played the bounce. So I want to play the bounce on Amazon if that goes down for sure.
Yeah.
It's the put and calls ratio is pretty equal on Amazon. So I have a lot of friends doing a spread, they're buying a put and buying a call, so they're doing spread on Amazon.
And if you would have done that yesterday on Facebook, if you would have bought some way out of the money calls and way out of the money puts, you would have made a lot of money because the move that we got, the 20% move, was so much more than the expected move that the put contracts, the money you would have made on the put contracts would have far outweighed the money you would have lost on the call contracts. So that's always a way you can play earnings if all you're looking for is a very volatile move to one side or the other. So yeah, just throwing that out there. But moving on from Facebook, Vivi. Let's get to some.
And I was gonna say sucks because when you have those like college kids, like they can afford spending $375 right on a lotto. But think about it, like if just a kid put $300 on Facebook, they would be $10,000 richer.
Yeah.
But
that's actually how I started trading options while I was in college, and I did it with all. $800 from my checking account. I was working like a minimum wage job at a golf course at the time, and I was able to turn $800 into 10 grand, and I was instantly hooked. I ended up losing a lot of that 10 grand subsequently. Yeah, Kevin in the chat knows what's up. He turned $400 into 12,000, so it is possible, and there are a lot of college kids out there that probably do have $350 laying around that. But I also, if that's all the money you have to trade, I wouldn't recommend doing one lotto YOLO
I made
with it.
10 grand today and I'm losing 10 grand tomorrow. Like I know SPY's gonna hit, but I thought, I bought 4 weeks ago and I thought this was the week that we were gonna get to that 420 and we didn't. And my puts are expiring worthless. So that's the beauty of options. You get burned or you make a lot of money. It's like now I'm like completely even out on my gain and loss, which sucks. I still do believe though that we're gonna have the correction and we're gonna go to that 390 level, but when? I don't know when, so that's the problem with the options for sure.
Yep. All right. We're all here. You're here because we all want to talk some biotech. Do you have any interesting names on your radar today?
I do. I want to talk to you guys about one thing that that I think it's gonna be. It's the price is so cheap. I mean, they're all cheap, right? XBI is at $90 right now. From the highest of like 180, I think. So everything is we talked about last week. Everything is on sale at a 40, 50, 60% rate. With the 3 to 7 interest rate hikes, the problem with these companies is that if they don't have a lot of cash flow and they're not producing revenue, they're going to have a harder time to borrow money, right? So I feel like all these companies are going to kind of have a hard time staying afloat. But I want to talk to you guys about, I think like in terms of like upside potential, I think the Gritstone Pharma, so GRTS, and I'll tell you guys the reasons why I think this is a good investment. Can you guys put it up, the chart?
Yep, pulling it up right now.
Yes.
Oh, I'm trying to. You got it?
Yeah, that's your chart, my man.
So
There
it's
we go.
GRTS.
There you go.
So imagine this. Look at how much they were before. They had some good results on their vaccine, but for some reason, the streets didn't like it and sold the news. That last up when it was like 12 or 14 bucks. And here's why I think this company. Oh, first of all, the market cap now is only at 350 million, and this company has in cash in hand 225 million. You're almost at trading at a cash value. But here's the things that I think that they are poised to dominate the mRNA market. They have a partnership with Gilead, okay, for a vaccine platform for curing HIV. Gilead has already paid 30 million upfront and bought 35 million in stock at 11 bucks. So that says a lot. I mean, I'm sorry, Gilead is my whole company. That was a bad investment, right? But not, only short term. So, and Greystone Bio recently completed a 55 million PIPE with leading life science investors, Fraser Life Science, Red Mill Group, and Gilead. So they had that private, offering. And then they also announced a groundbreak early stage clinical data, ESMO, from their immunotherapy program, the Granite, which I think that's going to be huge. This Granite program is very promising. And they have, obviously a multiple ongoing trials evaluating the self-amplifying mRNA as a next generation vaccine technology to combat COVID-19. So they do have, a more efficient, that it kind of takes care of all the, all the variants, which we know that Omicron has been a very hard one to combat. People are all my friends vaccinated got Omicron. And then their burning rate is the last quarter was at 27 million. So they still have 7 quarters. So they really good until 2023. So I feel like it's a good like long-term, like 6 to a year swing. I think it would be a really good, this company, I believe it would be a huge company one day. So I have a set and forget it on my Fidelity account on my IRA. So that would be one.
My only question for Gritstone is, I mean, looking at it, it says it's engaging in developing personalized cancer immunotherapies to fight multiple cancer types and infectious diseases. Yeah. It sounds like a lot of this, maybe kind of down the road, forward looking. Does Gritstone have any drugs on the market right now?
So I would have, if I had it to do, I mean, if you want to tuck in and start accumulating for long term, like on your long term account, yes. But they do have some catalysts, I think, in Q2. So if you want to play catalyst, they're gonna have something until they run out of money. So you have 7 quarters to make some money in short term and off their catalysts. So that would be if you just want to swing it. But for me, the Granite, the potential of this pipeline is enormous. So I am holding long term. I feel like it's one of my lotto buys that I tuck in. But I know what you're saying. Like a lot of these companies, you need to have enough capital. So if you guys want to put ADP, it's ridiculous the amount of they have money all the way to 2023. Genentech has an agreement with them up to $3.7 billion. And look at their stock right now. So it's so cheap. It's also a stock that I believe will be, a multi-bagger one day. But everything is being beaten down, but they have enough cash. So which is a good thing, because you don't want to put any money in biotechs right now that don't have enough cash, because they're going to have a harder time to borrow cash as well, and these companies, everything is going to cost more. There's inflation, right? So these companies are just going to spend money like left and right. So that's why you either want to stay with companies like PCRX that it's being, it's producing revenues, than companies like Gritstone Pharma. But any company right now, if they have enough cash to last a year, it's a good swing if they have a catalyst coming up. If you guys, if you guys know what I mean, there's a catalyst, and they have enough money. So I think the most important crucial time right now is look at the calendar of the company, look at the financial, the corporate presentation, and see how much cash they have left. If they have enough cash and a year from now and they have a good catalyst coming, it's a good, it's a good swing. But right now, everything, it's 50-60% at a discount. So anything that you throw your dart at the wall, you're probably gonna get a 20% increase. It's like shooting darts on the wall and like shoot it. You make 20% in any kind of biotech you're getting that has some good catalysts on the horizon.
Vivi, we got some questions in the chat. Well, actually, no, we had a bunch of stuff from last week. Did you write
that
down?
So here's what happened. I had a hard time finding the show, and you guys are supposed to mail it me. I mean, if anybody in chat has a question, I can just pull it up really quick here and kind of wing it. But I couldn't figure out what the tickers that they were asking because I wrote it down. I couldn't find my notes. So I'm sorry, you guys. But do we have anything on the chat that people are asking?
Yeah, we do right now. Someone asked about was it Beam? Is that what they asked about? BEAM, I think. Hold on, let's go. Let's scroll. It was sorry. Yeah, it was Beam. BEAM.
Okay, so
I've actually heard of that one.
Yeah, heard of that one too. As
$61,
it's not, it's not your little small cap, So I'm just checking here. Okay, so what are you looking?
I'm looking at the company's revenue because I figured because it was the market cap's higher and because it's a $62 stock that maybe the company's already bringing in revenue, but it's really not. So
it's not bringing any revenues at all, huh?
No, not at all.
Yeah, I mean that's your problem right there. How these companies are gonna have to continue to. Do you know how much cash they have left though?
Let's check.
Wait, it should say right there if you go to the overview, it should say just cash on hand. You scroll down, you should see keep going, balance sheet, how much cash they got. $612 million.
Yeah,
that's not nothing.
Not nothing, but no,
that's not a lot. So let me just see.
less than $1 million of revenue. It's
not dire though.
No, I mean they've got cash, total assets about $1 billion, but the market cap is $4.5 billion almost. So it still seems a little bit expensive to me, but I don't even know.
So here's my take on it. There's not a single pipeline above phase 1 and 2. So we were like 5, 6, 7 years from having an actual drug,
Yeah.
So that's the problem here. They only have INDs. I mean, there's not a single molecule that has started phase 1 and 2. That's your answer right there. I would not touch it.
Yeah, someone in the chat saying Beam signed a deal with Pfizer for a $1.3 billion deal. So I guess that's at least a good sign that the company's attracted the attention of some of the bigger players out there.
Yeah, so here they have 3 undisclosed targets from Pfizer. Yeah, so a lot of these companies, they're going to need partnerships, right, to survive. But the problem is, I told you guys, one of my rules is I don't invest. I'll swing companies, or if they're really cheap, I'll start accumulating, like, for example, ADAP. They're still very early stages, but I don't go like on a sizable amount until I know that they can prove that they can make revenues, like BCRX. I start very slow. I bought it right after offering it at $380. And then I start accumulating when I saw that they have a successful launch. So these companies, unless they get a miracle buyout, but no Pfizer, no drug is gonna take a risk of buying a company on not even on a phase 1 and 2, And so we don't even know preliminary data on these molecules. So yeah, the answer would be no for sure.
Okay, I got to address this in the chat real quick. Tampa Bay Buckeyes asking about INO and Novio. So this is one that I actually know something a little bit about. I mean, this company, I don't even know if I'm allowed to say this. It's like a total scam.
This has been a mess.
Total sham. So Inovio, basically, to give you some context on this, this company, when Zika was the thing, came out and said like, oh, we have the vaccine for Zika. Did the same thing for Ebola. Never brought forth anything.
Yeah, I remember this. You told me the story.
Yeah, and then so I actually, when Inovio was being thrown around as a COVID name because they said the same thing with COVID, like, oh, we're working on the vaccine, we have this. I was like, oh, these guys, they're doing it again. I bought puts on. I'm showing my history on Robinhood.
Nice.
I bought puts on. No, it wasn't nice because I was way too early. I bought puts on March 4th, 2020. If I just would have had those $3 calls instead, I would have made like thousands of dollars off a $15 bet because the stock went to like $30. But I bought puts.
You were early.
I was way too early, and then
sucks.
I did play it a little bit on the downside, like puts all the way down here. But I was very early identifying this stock as a complete scam.
But
basically.
I want to be a little devil's advocate. I'm looking.
Yeah.
Unless it's they don't have to back out, which would be a sham. It says here that they are backed out on COVID by CEPI, by Bill Gates Foundation, and by the World Health Organization, on their COVID. And then on infectious disease, they have a DARPA, they have NIH, which is a national infection. The NIH is the vaccine national. I forgot what the NIH stands for, and
National
DARPA.
Institute of Health.
National Institution of Health. So, and then the Immune Oncology, they do have one for for brain cancer. They have a Regeneron partnership. So. And then when you look at more COVID, they have AstraZeneca partnership. The problem is a lot of these molecules is still very early on. I mean, if they have these foundations and these organizations behind, it sounds legit, But right now for the COVID, they have 2 phase 3s that are backed out by Bill and Gates and CEPI and World Health Organization. But World Health Organization doesn't mean much, right? When they back out also the Ocugen vaccine and nothing happened. Yeah, but CEPI, it's a big one. It's a government one, that funding. And then, but the problem is it's cheap right now, right? How much money they have left and when these catalysts are coming up. But didn't it go to $30 a share at one point?
Yeah, and I mean that's what I was showing right there is because back here, or let's go all the way back here, where COVID first hit, the stock and actually what ended up happening, so the stock spiked because they said, oh yeah, we've got all this good data, we've got our vaccine that's underway. They even went straight to Trump while he was still in office and said, like we're doing all this stuff, and then stock got as high as $30, came crashing down, currently back at around $3.50. Some shareholders actually got together to sue the company, saying they misled about how far along they were. They've got about $70 million of cash on hand right now. So I mean, some of the numbers don't look terrible, but I just think the company has a history of marketing itself as like this vaccine leader. We're so far ahead of the in the Ebola case, in the Zika case, and then they did the same exact thing with COVID. I mean, the writing was kind of on the wall. So again, I don't know
what you mean. Like the Zika, he assessed phase 1. That is nothing, So
well, that was what, like 10 years ago,
So I feel like, geez, maybe we should call leaps 3 years out. But I feel like they're just good at marketing themselves. And I'm telling you, a lot of companies are good about throwing PRs, so they kind of like they kind of fluff it up, their PR, and, they're
100%. And then it came back to bite them because they ended up getting sued by the shareholders. But I'm just kicking myself because, I mean, March 4th, 2020, that was like before COVID was even a thing. I was already buying puts on it saying you guys are a scam. I was way too early.
You were right, but you were early.
Right, but it didn't matter.
It didn't matter.
I was right.
$5 puts, like leaps.
Well, or if I would have bought calls saying, okay, I know this company's going to say they're going to do it, people are going to buy it, and then use the money from the calls to buy puts. All right. I keep seeing J Rose bring up ARDX. I know we've talked about that one before, so let's check in on that one. And then this will have to be
it's the biggest FDM scam ever, So I mean, seriously, guys. I mean, there was 3 studies confirming efficacy, that all like double-blind placebo-controlled studies. There was a whole sales force. There was a whole company. And, these people's livelihood and these patients got robbed away from it, And they say that the competition, which I think it's Sanofi, one of those competitions had somebody that worked at FDA, now works for them, and that was trying to squish this company and put them out of business. So what I understand is they are that molecule is also approved for IBS, and they're expecting that it's going to be a good launch and a good product. So when I was talking about valuation, they were saying that company is at least worth $3 a share, so from the 70 cents now just for that one product only, but obviously they were trying to get the approval for the kidney disease. And I don't know, I have a post-traumatic disorder, PTSD. I went the first time I tried to go all in, buy 10,000 shares for PDUFA. I mean, I had friends working there. Everyone was like ready, like training, all ready to start selling, like 3 weeks later, and the whole company got decimated. So it's like, I don't know. I think that still there's an upside for their products, but who knows when the other proof is going to be. And like I said, I apologize if I gave you guys that I lost more or as much money as you guys, or even more, because for me, it was a slam dunk. 3 really good clinical trials. I talked to nephrologists that were really excited for this drug, and look what happened. So it's so unpredictable. I mean, look at the Biogen. Biogen got approved for that shitty drug. They just post $1 million in revenue for 1 quarter, which is nothing. They're struggling. Doctors are kicking reps out because they don't want reps to come and promote that drug that doesn't even have an efficacy. So it's just such it's such a Russian roulette now these days for PDUFAs.
Right.
You can have a really good drug and then completely be shut down. So
all right, Vivi, we got to let you go here. Vivi the Bio Queen joins us every Thursday to talk biotech stocks. Vivi, have a good rest of your day. We'll talk to you next week.
Yeah,
stay warm.
If you guys have more tickers, just email me.
Stay warm, Vivi, please.
Okay, you guys take care. You stay warm. It's sunny, 66 here.
All right.
Take care.
All right. Hey, it is 1 o'clock. Before we go to our next guest, I have a couple of announcements I want to make. Announcement number 1. If you are like me and you are interested in the cannabis space, you either have some stocks that you own, some ETFs that you own, or you are interested in investing in cannabis. The biggest thing, the only thing that really matters right now is legalization. When? If you have followed Benzinga for a little while, you know that Benzinga was really, really early on covering the cannabis investing in the cannabis business space. We've been covering cannabis investing for like 7 or 8 years now. We have a lot of very high-level contacts and relationships throughout the industry. As such, on Cannabis Insider today, it's our Tuesday, Thursday show at 4 o'clock. We have a special panel. We have convened a panel of experts, and they're going to talk about legalization this year. What's going to happen? When is it going to happen? This is the only thing that matters. I own 4 cannabis stocks. I own Trulieve, I own Green Thumb, I own Cresco, and I own oh shit, what's the other one? Trulieve, Cresco,
Cureleaf.
Thank you. Cureleaf, Trulieve, Cresco, Green Thumb. I always forget one of them. I own 4 U.S. cannabis stocks. Legalization is the biggest thing right now. What's going to happen?
Legalization's so hot right now.
It's so hot right now. Today at 4 o'clock, we have convened a crackpot panel, pun intended, of experts that are going to talk about this very thing. So after At the Close today, 4 p.m. Eastern time, right here on youtube.com/Benzinga, we have literally, like we know all the big people, all the right people throughout the space. We've been covering it for, as I said, like 7 or 8 years now. So if you have questions about cannabis, about the future of cannabis in the U.S., what's going to happen with the law, ask it on Cannabis Insider today at 4 o'clock. I want to put that out there. Second thing I wanted to add is I see one of our next guests here. I don't see both of them, though. Steven, can you just hit Dan up for me real fast and see if he forgot about us? Aaron, I had a tweet go like mini viral.
I saw. I liked it.
Oh, thank you. I didn't know. I didn't realize.
I thought it was funny.
Thank you. I
was like kind of in tears though because I had those Facebook calls, but I still thought it was funny.
Oh man, yeah. For me, it was. I had like 500 likes.
Oh, I liked it early then. I liked it. I was like, I think the 105th like, and I was like, oh, 100 likes, Spencer, nice.
No.
Anytime you're talking in like the multiple hundreds of likes on a tweet,
we're at 591 likes right now. That's mini viral for me.
Yeah. You're like a little micro celebrity.
I'm basically an influencer. Where's my blue check mark?
Did I tell you when we were down in Orlando for the FinTwit conference, I had someone come up to me and they were like, "Oh, I watch you on TV all the time," and I was like, "What?"
What?
Yeah, it was weird.
Anyway,
I mean, that was the only place I was ever gonna get recognized was like at a FinTwit conference.
We're putting on. I don't know how much I'm allowed to say right now, but we are hosting an in-person conference in Vegas in June. Like Benzinga is at like a trading event. I imagine we will be there, Aaron.
I hope so.
I imagine we'll get recognized there as well. I don't have any more details other than June in Vegas. So, and I know it's early June. That's all I know though. So we'll announce more as that gets closer. Anyway, let's do this. We have a weekly recurring segment on this show with a couple of guys from TradeZero, all about short selling. If you have a question about shorting, how to short, when to short, what to short, well, we can't tell you what to short. We can only give you our opinion. Our next guests can address that. Dan Pipitone is the CEO of TradeZero, and Steven Johnson is an independent trader who uses the platform. So let's bring those guys on right now for our recurring segment, Zero Hassle Short Selling with TradeZero. Hey, what's up, boys? How we doing?
What's going on, fellas?
How is it?
Makes me excited every time. I gotta say, it's awesome.
The intro gets you amped every time. That's great to hear. Great to hear. Steven, you're on mute, man. Can't hear you.
Yeah, I just have one quick question before we get started. I heard the biotech lady. I was watching a little bit about what you said. The biotech woman was swearing a little bit. Are we allowed to swear on here?
Yeah, a little bit. Yeah. Let's just keep it. Let's just like not go overboard. All right.
Yeah, no worries.
Yeah, all right. Okay, so when we started doing this segment, guys, I feel like the market was in a very different place to where it is right now. So what I really want to know is, I guess, Steven, we'll start with you, and then I want to go over to Dan, is like, what have the past few weeks been like for you?
It's been really, I mean, the final months of the year and the start of this year have been really tough. I know a lot of traders have been like sizing right down. But for me, it's if you can adapt to the market, it's been okay. For me, it's been just waiting for the right opportunities and finding other stuff to do sometimes. Like, so for example, I'll put more time into working or fitness or running rather than staring at the market in case I take a compromised setup that's not as good because there aren't as many.
So why aren't there as many setups for you right now? I'm just trying to understand.
I mean, like, I don't know the macro big picture as well as a lot of people. I literally look at what's up on the scans day in, day out. But basically the SPYs, it's not been falling apart, but we saw the trend break. We saw 4 or 5 big red days, and as 4 out of 5 stocks follow the market, a lot of stocks have followed the SPY in the drop. And when things are going down, there's just generally a bit less volatility in the small cap land. It's what I've seen historically.
And that's what, and you're a small caps guy.
Yeah, I'm a small cap guy. I'm a small guy.
So, interestingly, guys, Spencer, if I could, I was on the phone this morning with 2 of our major stock loan providers, locate providers, and it's really a crazy dynamic because you would think the month of January, I mean, we didn't volatility. We had extreme volatility.
Yeah.
And I think to the point where, to Steven's point, I think kind of people kind of sitting on the sidelines more in fear for getting caught, right? And these wild swings that go back and forth. I mean, listen, you would think intuitively these are golden opportunities, and they are if you're on the right side. But I think the wildness and the extreme nature of the swings, I think really kind of kept people on the sidelines. And we were kind of comparing notes where, January was, you would think, super volatile month. Why was it kind of slow in terms of the uptake and the volume, especially on the short side?
But just one thing to quickly add as well, like, it's not so bad if you're a short seller because stuff's going down, right? So like stuff's going down, and as a short seller, you bet on things going down. So it's not so bad as a short seller. But if you're long in listed stocks, if you're a listed long, it's a terrible time. It's a terrible time.
Wait, what do you mean by listed long?
Like if you're long in like NASDAQ stocks or New York Stock Exchange stocks, if you're trying to buy them on the way up, I mean, I think it's a bloodbath, honestly.
Well, look at today. I mean, if there ever were a time to that was more apropos to talk about, forget about short selling as a strategy, but more to have it as a tool in your tool belt, right? If you're looking at it right now and you just, praying for that entry point of when you think it's going to turn around, it's nice to have the ability to say, you know what, it's not turning. The day started with the stock down about $65. We're now down about 80. So to just have that ability and an easy way to get into these things on the short side is very important to have in your repertoire, in your trading program. Having the ability to do that.
I want to put it out there again to the audience. Dan Pipitone is the CEO of a broker dealer. If you have a question about what happens behind the scenes when you short a stock, when you go to find a locate, he can answer it. This is your time. Right. This is your time. Ask Dan your question, right? Because he's the guy that understands the pipes, right? What happens when you go to sell a stock and you can't find a locate, or you get a locate, or you don't get filled, and he knows all that stuff. So ask him. Made in India, when will TradeZero have an API? That's an off-topic question, but I guess Dan could speak to that as well.
Trading API is in the works. Okay. That would be the first. Market data is not something we're doing. It's very expensive to take in market data over an API, but a trading API will be available probably this quarter.
There, I hope you're happy, Made in India. I have no idea who that is. Just kidding. I do know who that is. Okay, so guys, bringing it back to the overall market, and Dan, so you were having that conversation with one of your locate providers, and again, the assumption is January was a really tough month. Well, it was a really, really good end of the month, but a really tough 3.5 weeks before that. I'm just curious, like, what did you see on the platform as far as activity? Did anything reflect the market volatility?
I think just like every other year, it's kind of like, New Year's Day, and then, you're driving along and you're looking outside and you see, a gym, and a whole bunch of people are lined out because it's New Year's Day. Everyone's got this new rededication to getting in shape. Drive by there January 10th, maybe not so much. We see that every year. Coming out of December, coming out of the holidays, coming out of a time that's traditionally like slow and people are just not focused on the markets. The beginning of January, we usually have a surge, and this year was very in line with that. However, as the month progressed and the volatility took hold, I think kind of people shied away and stood more on the sidelines. So January was a very interesting month, very non-traditional month. We talked last time about some of the seasonality in this business, and January is usually one of those sort of bounce back months. You have some slowness in December. But that's not something that we really saw this January.
Okay, a couple more questions for you, Dan, in the chat, and then I want to keep Steven involved as well. Elon wants to know, I don't know if it's Elon Musk or not, but he wants to know where in South America is TradeZero available or not available? I know, Steven, you're in South America. Shouldn't you know this as well?
True that. I think it is. I've got a couple of friends who trade from South America, but my account's from England because that's where I set it up.
Okay.
So.
All right.
But we're good to go in all of South America. We have actually 2 broker dealers with a Canadian broker dealer coming online very shortly. One here in the U.S. where I sit in that office. We have one in Nassau, Bahamas. That allows us a gateway to countries outside of the U.S. and Canada. So if you're someone in South America, Spanish-speaking, Portuguese-speaking countries, we're happy to onboard you. We do have a significant client base trading from South America.
Just one thing to touch on. One observation from living in South America. There's some extremely educated, like a lot of people in South America are very educated, very intelligent, very smart. But due to the economy, a lot of people don't have the opportunity to earn as much as they could, say, for example, in the States. And that's one thing where trading really interests me, because if you're trading with like a $600-700 account, there's no obstacle to how much you earn based on the amount of dedication you put in. Your pay reflects on how hard you work. And I think it's just an interesting thing, because a lot of people in some of these countries, they can't make as much as they should with the talent, if that makes sense. And trading kind of democratizes that in a way.
Agreed. And to Stephen's point, the international offering that we have really is focused on providing those smaller accounts, not only with the access, but also the freedom of action to trade, whenever they wanted. They're not limited like we are here in the States.
Stephen, we got a question that's right up your alley here. Annie wants to know, is it good to short? I think it's the question. Is it good to short stocks with low volume? I feel like this is your specialty.
Yeah, no, there's a number of variables or indicators that I look for, and the more variables that add up, or the more indicators that add up, that allow me to build a case. Say I've got 7 short-based variables or indicators. If I've got all 7, then I've built a very comprehensive and good case to short the stock. So, for example, if a stock's in a biotechnology sector, this sector doesn't often make money. They're researching drugs, and they need to constantly, but they're not generating profit. So it might be a good company in 10 years when they make a drug, but it's not a good company now. So sometimes one indicator would be the biotech sector. Another would be a big gap, because it's already come a long way really fast. Like say overnight. A third would be low volume. So if it's made a big move, but it doesn't have the volume to sustain the move, and it's in a sector that doesn't have a promising next month, next 2 months, next 3 months, next year, all of these are very good short indicators for me.
Okay, so the bottom line is, like, you do look at volume, but you don't, like,
Hugely.
you're not necessarily going to say just because the stock has low volume makes it a good or a bad idea to short it, right?
It's the biggest indicator for me as a short seller.
Okay.
It's the biggest indicator, low volume.
So, but in what way? Like, low volume is good or low volume is bad?
I think a lot of the market is long biased. A lot of people don't really know about short selling until later on. So a lot of new people and a lot of people in the market are long biased. So if for me, a lot of volume is a lot of people buying, it's a lot of demand. If you have a lot of demand and the stock doesn't have much supply, it's a very bullish sign. The stock can go higher. But if there's not a lot of volume, that means there's not a lot of demand. If the stock's up a lot and there's not a lot of demand, but there's a lot of supply, it just means it's more likely to drop because there's no one to buy at the lower levels.
Okay. So low volume to you is an indicator of it that could
one of the best.
Be a good short. Yeah,
one of the best.
Okay. Dan, this one's for you. Andy Y wants to know, hey, what's the deal with? I think it's Jerry Seinfeld. What's the deal with these dark pool orders? No, I'm just. But that's actually the question. Can you? Andy's asking for some clarity on dark pool orders. I don't know specifically what he's asking, but he's asking you to explain them.
Yeah, so there are what we call lit exchanges and there are what we call dark exchanges. The lit exchanges are those folks that you see if you're looking at a level 2 screen, you're going to see their prices, their sizes enunciated. You can see, what market participant is at what price. Whereas the dark pools, because of the way they're set up, are not obligated to display, their order book essentially on the displays that we can see. If you're trading with us, many times, more often than not, you're going to see if a stock is, for example, 10 by 1001, and you look to buy a stock, you would typically get filled at 1001. If you're going to sell the stock, you typically get filled at 10. A vast majority of the orders that pass through our system, we're actually scraping some of the dark liquidity that exists in between the bid and the ask. So many times in an example of a stock by 10 by 1001, if you go to buy the stock, you're going to get filled to something like 10.00936, where what's happening is there are actually shares that are available in between the bid and the ask that we're going to scrape our way through into the ask price. So more often than not, you're going to get fills with liquidity that exists in between the bid and the ask that we can't see, but it's there. So dark pools, in my opinion, add to the market. They provide folks with potentially better execution prices because there is liquidity that exists in between those whole pennies of the bid and the ask.
Within that answer was a mountain of things. I think there was a lot in there. Maybe I should have, before I asked, maybe I should have asked you to explain what a dark pool is first, because I don't want to assume anyone knows.
It is a market participant that will post liquidity and remove liquidity, typically in between the spread, in between the ask price.
Okay. There have been entire books written about dark pools.
There's
a book called Dark Pools. I have it on my shelf. I haven't read it yet. It's on my list. So there have been. It is a complicated topic, but the bottom line that Dan just said is, even if you don't see it, it factors into the liquidity and what's available in the market, which I think is important to know. They're not just mysterious, ominous things that are
correct, and they're not really sort of working against the retail trader. There's pools of liquidity there where if your broker dealer is set up to interact with that, it's going to be beneficial to you in terms of your execution quality.
Yeah. Okay. Oh, this is a great question from Daniel. The moment you short a stock, is it borrowed and immediately sold at the ask, or does your broker try to get you the best price between the bid and the ask? For wide spreads, this is worth considering. Great question, Daniel.
So can you repeat that, Spence?
I brought it up on the screen.
Oh, here.
The moment you sort it, I'll let you read it yourself.
Okay, great. So it depends, Daniel. It is a great question. So there are two different facilities for ascertaining the ability to go short on a stock that is not easy to borrow. One is called a locate. So a locate is not a borrow. Locate gives us a reasonable basis to believe that if you held the stock overnight, where it turns from an intraday short sale into an overnight borrow, we have a reasonable basis to believe, by nature of that locate, that the firm in which we've located the shares at, we have a reasonable basis to believe they will make delivery, so that they will actually loan us the shares. That's different than a pre-borrow, where if you say, hey, I know I'm going to hold this stock short overnight. I don't want to have a concern about being bought in, potentially, if you guys can't get a borrow. So you can interact with us and say, hey, through our live chat, soon to be added to the platform, and say, hey, guys, I'm looking to go short, 1,000 XYZ, and I think I'm going to hold it for a week. Can you get me a pre-borrow so that I know, come settlement, the day after, I'm not going to get bought in. I've already gotten the shares. So there are two different dynamics. A short sale turns into a borrow once you hold it overnight. And if you know that that's what you're going to do, it's always advantageous to ping your broker and try and get a pre-borrow, so that on settlement, which is trade date plus 2 days, you don't have the potential of being bought in if your firm or your clearing firm can't find that borrow.
That is an admittedly low possibility, though, right?
It's totally stock dependent. It really is totally stock dependent. So if you know, it's always better to get a pre-borrow.
Okay. That was a really great question. Really great question. Really great answer. Thank you for that. Again, Dan Pipitone is the CEO of TradeZero, and Stephen Johnson is a trader who shorts for a living, basically, is how he makes his living. Okay, was there anything else, guys? This is structured as more of just a casual Q&A segment. I really just wanted to get your guys' thoughts on the last month. Do either of you have any thoughts, like, going forward here as far as Stephen, like, how you're approaching the market now, or Dan, like, any new things that we can, like, look ahead to as far as the platform?
For me, all I'll say is that historically, over like the last 10 years, small caps, although there might not be as many opportunities every day as there has been in the past. Historically, they've never stayed dead for long. So it's a matter of days, weeks before the market lights up again. And all of a sudden, the way I see it is, you've got a lot of people shorting a lot of stocks up 10%, up 15%, up 20%. One of these stocks is going to go 200%, not 20%. It's going to make a crazy run. a sector is going to light up and come on fire, and then the volatility of the market's going to return. So for me, it's just not getting caught in that big runner, and having the discipline to keep my discipline, and just get excited, because it's not it shouldn't be far off now.
And I think, from a macro level, as we see, sort of this big tech story unfolding with a lot of these stocks really coming back to earth, I don't think it's ever been more appropriate to have access to be able to short these things and to participate on the downside. And just as a quick update in terms of functionality on the platform, we are expecting a major update to the system as it relates to our short locate product. We're introducing something called request for bidding, which basically allows the trader to say, oh, I see that you guys are selling a locate at 2.5 cents. I'm looking to come in and short 5,000 shares. Will you sell it to me at 1.5? So we're building this process out as sort of a name your own locate functionality, which we're expecting this month in February, which we're really excited about.
Okay, real fast from the chat. There was questions about crypto and multi-leg options. Do you offer those? Coming. And then this question from Frances is more of a general question. I can answer this one. How do you react to short reports? Shoot first, ask questions later. Is probably how you react to short reports. In all seriousness, it really just depends on, hey, do you own the stock? And is it going down? Is it not going down? Do you want to own it? Do you want to get short? I mean, these moves are pretty instantaneous sometimes, so you got to beat the machines, which is almost impossible. But we can talk about that next time. Dan Pipitone, CEO TradeZero. Steven Johnson is a trader who shorts for a living and uses the platform. And again, the reason that we're doing this segment with these guys specifically is because TradeZero, this is what the platform is known for. It's a brokerage that is best for shorting, right? They won the Benzinga FinTech Award as best broker to short for shorting. This is what they do.
2 years, 2 years running, 2 years in a row.
Two times.
Two times.
Dan, Steven, have a great rest of the week. We'll talk to you again next time.
Be well, Spencer. Thank you.
Bye, guys.
All right. My co-pilot should be coming back to me. Actually, he never left. I'm just kidding. He's been here the whole time. Aaron Bree, where you at, my man?
What up?
What up? How we doing?
I'm good. I just heard y'all talking about a short report.
Yeah, there was one this morning, actually.
Really? Was it from our friend Edwin?
No, I didn't see that one. I was busy. I didn't see what his was going to be. I know it came out at 10:30. No, there was one. SLI, I think, was the ticker. So, okay, in all seriousness, Francis, I know you asked that question. Okay, so, let's go to a practical example right now, because Francis asked about short reports, and there was one this morning. It was SLI was the ticker. So here, let's just show you. The short answer, Francis, is it really just depends, okay? So in this case, I'm going to look at SLI right now. When did the report come out? It came out pre-market. It came out at 8:30 in the morning. Look at that giant red candle, okay? And let's go to a 1 minute chart, actually. Who did it, Edwin?
Roblox.
Okay, we'll talk about that after. You can see when the short report came out today. That huge red candle, okay? So this is 8:39? 8:39 in the morning, okay? Almost an hour before the market opens. Most people are not trading at 8:39 in the morning, all right? There is way less liquidity. So the timing matters, okay? For the vast majority of the market, the move was already over by the time they even had the chance to play ball here, okay? That's the first thing. The second thing is, who did the report? Well, in the case of SLI, it was Hindenburg. I think broadly speaking, the days of the glory days of short selling is at least for the time being over. That being said, Hindenburg has over the last couple of years probably become one of, if not the most influential short seller or short reporter on Wall Street. They shorted Nikola. They shorted, I'm blanking right now, but there was a really good profile of Hindenburg, and I think it was New York Magazine a couple weeks ago. I tweeted about it. They've been on fire. I mean, they're not always right, but they've been on fire the last 2 to 3 years or so. So they have cachet. They have influence now. Their reports matter, as opposed to some random firm that you've never heard of. Hindenburg, people know them. Okay, the term, the headline, Hindenburg releases short report, that by itself has the power to move a stock, as it did this morning. Okay, so that's the second thing. First thing is timing. In this case, it's in the morning before the opening bell. Unless you're trading pre-market, you can actually see here the stock is where did it open today? It opened at 592, so we're only down 28 cents, less than 30 cents from the open. Most of the move was already priced in, so you kind of missed it, unfortunately. And then the other thing is, obviously, you should look at the report if you're interested and see, is there any there? Are they talking about are they nitpicking? Are they how legitimate are the accusations being levied against the company? And you kind of have to use your best judgment for that. The market will tell you, because the market will, if it's not a serious report, the market won't care at all. But I did not look at this report at all, so I don't know what it said. But the fact that it's Hindenburg alone makes it influential. So our friend Edwin shorted Roblox. Is that what you said?
He put a short report out on Roblox, and actually it looked like the stock moved off of it, even though it's Oh,
wait, I have one more thing to add. Sorry. And this actually goes into Roblox. Standard Lithium, I put up a daily chart here, okay? Look at the daily volume of this thing. The stock trades somewhere in the range of 1 to 3 million shares a day. It's not a super liquid stock. Now, compare that to Roblox. Look at the daily volume in Roblox. About 30 million shares a day. Way easier to move a stock like Standard Lithium, SLI, than it is to move a Roblox. Roblox is so widely traded, such a thick stock, the spreads are so tight that it is very difficult to, Roblox is probably not going to move off of any one short report. I see it's down today. Oh, you can actually see, this is funny. You can see when Edwin's short report hit, exactly. How do you know? Look at the big volume spike and the big red candle. So Edwin did move the stock.
Yeah.
Look at Edwin. He moved it. Forget what I just said.
A stock that big. I mean, a $40 billion stock. Edwin's short report basically talks about how maybe some adult users have been using Roblox to interact inappropriately with children.
What?
Well,
this is why we can't have nice things, Aaron.
Well,
this is why we can't
I don't
have
find
nice
it
things.
like that's. I mean, it's like when Facebook became a thing. It's like that seems to be just kind of a given with any platform that allows. Unfortunately, like a given that happens when a platform is given that allows certain adults to interact with children. There will be a certain number of them that will behave inappropriately. The question is Roblox doing enough to curb this, to protect its users, which is mostly kids? So I don't know. Again, I mean, it's not like I think this is entirely shocking. It's more just about what is Roblox's response going to be amid these kind of claims. It's like there was a big kind of hit piece on Airbnb where people talked about Airbnb.
We talked about that.
Yeah, we talked about it, how Airbnbs, what they did to kind of try to hush quiet the bad thing. I mean, talk about murders that happen inside of Airbnbs. It's like when you run a business like that, those things inevitably will happen. The question is, what are you doing about it? And the accusation against Airbnb was essentially they haven't been doing enough. Roblox does have apparently a team dedicated to this, to monitoring everything. But yeah, I mean, if I had kids, I'd be scared of them having Snapchat, Roblox, all these platforms that allow adults to kind of try to prey upon them. So
for sure,
it'll be interesting to see. But yeah, I mean, kudos to Edwin for being able to kind of have this impact on a $40 billion stock like Roblox.
We should reach out to get Edwin on the show, man. I should do that. Okay.
We'll get Edwin on soon. For Roblox. Yeah, we should have had. Maybe we gotta. But here's what I think is crazy about short reports: is it's completely legal to curate all this information, put a short report together, and then also short the stock.
Yes.
Granted, to actually move a stock like Edwin has, you have to build up your credibility. You have to show that the investigations you're doing, the information that you're bringing forth is pertinent and truthful.
Yep.
which Edwin has done a great job. I mean, I can't speak highly enough of his work because he's only, 22, 23 years old.
He's super young.
And he's kind of just had a penchant for this. I mean, people get into the markets in different ways, and he basically found out very early on, hey, this is what I think is fun. I think it's fun to essentially investigate companies, find companies that have, and I don't think there's a company out there that if you don't do digging on can find some dirt on, find at least that maybe they're, some of their press releases, that some of their marketing isn't what they make it out to be. I mean, you would be very hard pressed to find a company where 100% there wasn't anything you could find on it. So it's just about knowing where to get that information. Edwin utilizes FOIA's, Freedom of Information Acts, which is essentially there's a lot of public info out there that you are entitled to but isn't released essentially automatically. So you have to go essentially request it, and then that information becomes public. So
if they gave it to you without crazy redactions, and
sometimes you'll get like subpoenaed, and like you have to like
provided you can afford to pay the cost per what they charge you per page, right?
There's some Ken Clipperstein, a guy on Twitter. He's a big FOIA guy, and he's showed some times where he's like requested FOIA and they make it purposely hard for him. Like the one page he's looking for, they'll give him like 2,000 pages and be like, yeah, here you go find it, Ridiculous. So not an easy process, the FOIA process, but Edwin, utilizes that sometimes. But yeah, I mean, again, I don't read Edwin's short report being like shocked by anything, because like I said, I think anytime you have a platform like that allows children to be on there interacting with strangers, for whatever unfortunate reason, this is something that will and can inevitably happen. It's all about the company's response for this going forward.
Yep. And to the point about short, people publishing short reports and shorting the stock ahead of it. And I mean, the market is the ultimate arbiter, right? If you put out a report and it's garbage and it doesn't move the stock, then that's that, right? I personally, I think it's legal. I think it should remain legal. It's a manipulation. Everything is manipulation in its own way. I don't think it, front running your own report. If you have influence, then that's good. Then good for you, frankly, right? I mean, if you have the influence, very, very, very few people can have big enough influence to move a stock by themselves. Like, I can think of maybe 5 people off the top of my head that have the influence. Andrew Left used to, but he doesn't publish short reports anymore. Hindenburg has proven he has influence. Warren Buffett can move stocks. But there really are not a lot of people out there. And I'm not talking about like the CEO of a company moving. I'm talking about like somebody moving any like a random stock. There are, if you have influence, good. I kind of think good for you. Good for you, honestly.
Yeah, and I mean this vindicates
that's just sort of
the fact that Dorsey has at least some pull, because he's able to move a $40 billion stock.
Yeah.
I mean, granted, Roblox is now moving back up and will probably close right around where it was before the short report came out. Because again, I don't think this is like new news for maybe a lot of, and I haven't fully read it, and so maybe part of it is new news in the short report, but just the fact, kind of putting all the information together and highlighting it.
Yeah, Kramer, thank you, Shelley. Kramer obviously has influence, right?
I think there's more than 5 people that, I mean, if essentially there's a lot of people, I think, that once you put them on CNBC, I mean, we saw yesterday when Kevin O'Leary was on CNBC saying he was buying Facebook stock, the stock got a little bounce, but that says more to CNBC than it does.
That speaks more to CNBC
than whoever's on there. But
right. Anyway, so okay, I have a segment I want to do right now, and we just put the link up to Edwin's Substack in there for you. We talk a lot about earnings on this show, especially during earnings season, and we talk about the fundamentals and the estimates and all that stuff. Let me give you guys a teaser as to the kind of research that the institutional side of Wall Street gets. Right, I got with some friends over at this firm called Visible Alpha. They were kind enough to send me a report. Sadat. I mean, frankly, yeah, I'll be honest. I think there are bigger problems out there. I think front running your own report in the grand scheme of things is not that big a deal. Sorry. I mean, I think Congress should not be. I think Congress trading stocks is a much bigger issue than some random person front running themselves.
Okay, so Sadat's second point, I at least I know I've seen Dorsey disclose in the past in some of his reports that he is holding puts on the company or he's short the company.
Yeah.
I agree that there are bigger fish to fry. I think it is. The one thing
there are bigger issues than this.
The one thing I will say is that if you're short a company and or say you're investigating a company, you find some problems, you decide to short it, it kind of takes some of the objectivity out of that report. I mean, it's not objective to begin with. It's not like a short and long report. It's a short report.
Yeah.
But I think, if you have $1 million bet on something and you publish all this bad information, to me, it's like, okay, but this person isn't going to give the concessions to kind of objectively view this. They're going to just be giving their side.
Yeah. And if the report is hot garbage, then may not happen right away, but eventually the market will see through that hot garbage. You only get so much credibility. Unless you're Jim Cramer. I mean, then again, he's been around for 20 years, so he's built that up over time. It's really no different than a company putting out a PR touting something else.
100%.
It's no different than that.
No different whatsoever. I mean, you know how many PRs out there that are like
thousands,
complete, not even bogus, but just like
tens of thousands,
regurgitation of the, just all these. It's ridiculous. I mean, the thing we were talking about yesterday with the trains and stuff, like there were so many PRs put out by Union Pacific, by LAPD and whatever that ended up.
Shelly says I can move stocks. I wish.
Yeah.
Does Chamath still move stocks? Not anymore. He there was a hot minute there where he did, but not anymore. Sorry.
I've noticed that a lot of Edwin's reports though don't get picked up by like mainstream media.
Interesting.
Like if you go, like I'm just googling Roblox and going to news, and there's no not one headline about like so and so short report, And I noticed that with, I think he did one on. Sleep Number. Oh no, Joint Therapeutics. He did one on Joint, and I remember that the stock went down like 10%, and there was no headlines out about it. And I was like, "Come on, man, give this guy some credit." Like no one at Bloomberg.
Shouldn't we have had that then?
Yeah,
you tell the news desk.
We should have.
Okay, so what I wanted to do anyway before I got distracted again, my friends over at Visible Alpha were kind enough to put together some research for me about Amazon tonight, and I want to share them with you all. Okay, so they sent me this sheet here that just I asked them, hey, can you look at like Amazon, specifically Amazon Web Services? I just want to have some context going into this report because for any given stock, for Amazon in particular, there are, if I had to ballpark it, let's just say 24 analysts that cover this stock on Wall Street. Maybe that's probably a little bit conservative, but let's just say 24 analysts. You get a lot of professional grade research is done on Amazon, okay, on the business. And when you're looking at an earnings report, the top line numbers matter, right? Do they beat the estimate? Do they miss the estimate? But like a lot of people on the street, they're going into these reports with the advantage of having some of the sell side research already at their fingertips, right? So Visible Alpha was kind enough to share. What they do is they just compile a bunch of sell side research and they do their own analysis. They were kind enough to share some stats with me. I want to share them with y'all right now. So I asked them, hey, can you guys look at AWS for me? And just I'm just curious about like how the AWS business specifically is growing. Okay, so this is Amazon Web Services revenue. Going back the last 5 years, and then they have a few projections out here. So we can see in 2017, Amazon Web Services was about $17.5 billion in revenue for the year. Look at last year, $61 billion. And again, this is estimate because it's kind of going to be based on the number that Amazon gives tonight. But from $17.5 billion in 2017 to over $60 billion last year. Okay. It's a cash cow machine. I also thought this chart was interesting. Again, it shows it basically just is a visualization of that table I just showed you. The growth of AWS. So the reason I asked for AWS specifically is because this segment is Amazon's cash cow. This is their growth driver. They have many other businesses, obviously, but this is where the growth is right now. You can see it right there on the chart, okay? So let's keep going here because there's a lot here that I want to show you. Okay, yeah, this is great. This table shows, actually, let's just go to the chart. This chart shows Amazon's revenue broken down by segment, right? By revenue from third-party sellers, revenue from online and physical stores, and revenue from AWS. And you can see that the gray there is AWS. It's getting larger and larger and larger. In 2016, it was basically nothing. It was the vast majority of the revenue came from other parts of the business. But now they're getting a not insignificant chunk of their revenue from AWS. So I wanted to show that as well. And what else did I want to show here? I didn't want to look at that. What else did I want to show? Here we go. Well, this is kind of the same idea, but shown in a different way. And again, the takeaway here is that AWS is growing a lot. Is sort of the bottom line. I just wanted to show you this chart, this data, because like we have some of the stuff in Benzinga Pro, but I want to give you an idea of just how much information is out there. And when you see an earnings report drop, right, and you see the numbers inside the report, and you see the stock reacting, know that there are people that are modeling out these numbers out the wazoo, right? And there's always going to be someone with information, more information, different information. And that can oftentimes inform what the stock does. So I'm going to try to do more of these segments. I want to see if they'll send me some different stuff going forward. If you have anything, and this is going to be around earnings, so if you have a specific earnings report coming up in the next week or two that you want to see some data for, drop it in the chat, and I'll see if I can ask them. But I just wanted to show that to you because that's the kind of stuff that the institutions have at their fingertips, right? And I thought it was really cool stuff. So thanks to Visible Alpha for showing me that. I'll get some more data for, so I don't know who reports next week yet. I have not looked that far ahead, but whoever the big report is next week and the week after, I'm going to try to see if I can get some more information from them. But again, information is everything, and fundamentals matter, not in the short term, but in the long term. So I hope you guys enjoyed that. And if you have questions about that, drop that, just ask in the chat. And they gave that to me, so I'm pretty sure I can share it if you're interested in seeing that link. But anyway, Amazon reports tonight. We will be streaming that conference call on Benzinga's YouTube. I don't know the time exactly. I haven't looked yet. I think it's 5 p.m. Eastern time, but don't hold me to that. But we'll be streaming Amazon tonight. Speaking of tonight, I know yesterday I said I would do Amazon. We would do Amazon and Ford. You want to do Ford as well, Aaron? Tonight? It's tonight. Should we stream Amazon and Ford, or should we in light of the Facebook report from last night, should we pivot off of Ford onto like a Snapchat or a Pinterest
or a Clorox?
No,
I'm kidding. Snapchat could.
Nobody cares about Clorox. Only you.
No. Snapchat could be interesting.
I think maybe in light of last night's report, we'll probably pivot away from Ford onto Snapchat for tonight. Because that report, that was a doozy last night. And there are implications for those businesses. So, okay, we're doing Amazon Quantum. Don't worry about that. Okay, let's do this. We are up against the clock. Time flies when you're having fun. And our last guest of the day is here with us right now. Excuse me. We are going to talk to Tony Drockton. He's the chairman, and he's also like the chief cheerleader in chief of Hammitt. We've been doing this recurring segment where we bring on companies from a news show called Going Public. It's the Amazing Race beats Shark Tank. Beats? What did I say? I don't know, guys. It's been a long day. Let's give Tony the special intro. Aaron, can we do that? I'm giving Tony the special intro. Tony, you ready? He's ready.
Do it.
Special intro time for Tony. Tony Drockton, welcome to Benzinga Live.
How's it going, Spencer and Aaron?
Doing fantastic. Aaron, can I bum your charger off you real fast?
Yeah.
Thank you, man. My computer's about to die. Tony, you're the cheerleader in chief cheerleader, right? It says it right there. How'd you give yourself that title?
That's right. Well, it was actually given to me one of my employees many years ago. I'd love to say I chose it myself. I give her a lot of credit. You know, my role as the chairman and founder has always been to sort of cheer on the team no matter what's happening. The fashion industry's got a lot of ups and downs. And I just remember, like, when I played football, when we were down, those cheerleaders were out there getting the crowd up for a comeback. And that's my role.
No matter what, right? No matter what,
it's a
right?
lot more fun. Founder, right? That's not great. So.
All right. Fair enough. Okay. So, Hammitt, tell us about it. Tell us about the business.
Yeah. You know, we're a luxury handbag brand out of Los Angeles. Founded 13 years ago in my garage right here in Hermosa Beach. And we're still right here. And we're just fighting the good fight to bring the first new American luxury handbag brand to America in over 20 years. I can keep going, but I'd love to let's just keep talking here, Spencer.
Why luxury handbags? Your background, as I understand, is in real estate.
Yeah. You know, I've got a multifaceted background. Like I said, I took the indirect route to the luxury space, both real estate, construction, digital advertising, MBA. I think my real love for fashion was kicked in many years ago. I love art. I love architecture. But I never thought I could be in the space until I saw these beautiful handbags built by Stephanie Hammitt right here in the South Bay. Decided to invest in with her. And within a year, she gave me control of the company. She wanted to step back. And here we are 13 years later. What I love about this space, Spencer, is that it's constantly evolving. You know, hey, software is great, right? Manufacturing, fantastic. But in fashion, just in the 13 years I've been in it, we've done a complete 360 of what's working and what's not, both online and offline, product-wise. Meanwhile, Hammitt, we've stuck the course of what's worked for those luxury brands 100 years ago and is still working today, which is you got to take care of the customer. You got to have the best product available against all your competition. And you got to make sure every experience with those customers is memorable so that they keep coming back.
So, like, as someone, this may surprise you, Tony, but neither of us know a lot about handbags. What are some of the headwinds and tailwinds you're facing right now? Like what is the state of the industry besides the fact that it's always changing?
Yeah, you know, I think overall the fashion industry, especially in the last 2 years, has been sort of the poster child of supply chain problems, sourcing problems, staffing problems, right? It's all been talked about. But the reality of it is, especially for Hammitt, we've more than doubled in the last 2 years. So when you talk about a tailwind, what we did is we leaned into the pandemic and we said, what can we do? Not versus what can we not do? Well, we knew we can keep our people. We can give them an opportunity to shine in new ways to drive top line revenue and make sure that we're going to still be in business on the other side of it. And we can lead into the digital sphere, into streaming and all the things that we could still connect with people. And then here we are in 2022, and last year we grew 83% year over year, and we've more than doubled since the pandemic started. Now, what's the headwinds? Whew, there's a lot of them. You know, we're constantly battling with the supply chain issues. But what we've done is we get ahead of that. We use air, we use other things. 60% of our revenue is the same product. It's called core, year after year, season after season. So really it's only that 40% that's at risk from supply chain, because you can order bestsellers way ahead and make sure you don't run out, Spence. So that's one big headwind. I'd say the second big headwind is there's not a lot of love or trust for retail right now. And I'm bucking that trend. We've opened a second store during the pandemic. We got a third one we're going to open ourselves. And we're carried in 900 specialty and department store retailers. And their business grew more than double in the last year. Why? Because we believe when you have great partnerships in retail, everyone can flourish. And we've proven that with the numbers. But the narrative in the press is just, no, retail is dying. It's just not true.
Tony, who are the biggest retail stores that you're currently partnered with?
Oh, I love talking about them. We're in the two only family-owned department stores. Jim Von Maur of Von Maur's in the Midwest. They got 35 stores. And then Bill Dillard's department store, about 250 plus all around. The reason we partnered with those two is that we decided early on we were going to be MAP priced, minimum advertised price, just like Apple was for years. Same price everywhere. We also decided it would be the exact same product no matter who we sold it to. We didn't make to margin. We didn't have off brands, or we didn't sell to discounters. So these two retailers early on said, we're going to embrace that and we're going to support you. They never put us on sale. They don't discount us. They're full partners in the relationship. And that's unlike any other big retailer that I spoke to. And then on top of that, we're in the Four Seasons, the Montage hotels, a lot of specialty resorts, and really probably a specialty boutique in every neighborhood that you would shop for a luxury brand, and then some that you wouldn't expect it.
Good question in the chat from Shelly. Essentially, she's asking, what is the price elasticity of a handbag here? And that's a good question because we're in an inflationary environment.
So good question, Shelly.
I'm curious. Well, I paraphrased. You're welcome, Shelly. But I paraphrased. But
Shelly from Delaware.
That's basically the question. That's what I want to know too.
You're taking me back to my MBA days. Price inelasticity so price inelasticity means that it doesn't change with demand. Correct? Can you help me out, guys?
Yep. Right.
Okay,
and then elasticity would mean, we're in an inflationary environment, so theoretically you have to raise prices. Can you do that? Right? Is that a thing?
Yes. So we have raised our prices in 19 and 20 and also in 21, just like the great luxury brands, the Louis Vuittons, the Gucci's. My North Star are the fashion houses that have been around 80, 100 plus years. Okay. And price to them is not a relationship directly of demand. It's more a relationship of positioning. So for Hammitt, at least, we believe that we can continue to command premium pricing over all the American brands simply because we're better. We deliver a better product and we deliver a better experience after product. As a matter of fact, I like to say years ago, if you take a look at the aftermarket, there's these websites called The Real Real, Vestiaire, Poshmark, Depop. If you take a look at what product sells on these sites, that will tell you what the brand value is in the product. So in other words, if it was originally a $500 handbag and literally a month later you can get it for $100, there's no brand equity in that brand. For Hammitt, if you take a look at what our product sells for used, slightly worn, or even new with tags after the season's over, sometimes it's 70, 80% of the retail price, and sometimes it's more if it's a limited edition. So to me, that explains the price and elasticity, which means I think we're a pretty valuable brand, correct?
And then just, you're a part of this show, Tony, this Going Public show. I want to ask you about that. I mean, you're basically trying to raise money for a Reg A offering in front of cameras in real time. Not in real time. Well, kind of real time. I mean, I'm just like, I imagine, not that I've ever done it, but fundraising in general seems like a gigantic pain. And doing it on camera seems like even more of a pain. So I'm just curious, like what that's been like for you.
Well, I mean, I'm a Cleveland boy, man. My parents taught me if you ask for money, it's a sign of weakness, and you take care of yourself. You earn it, you save it, you spend it. But borrowing it from others, so I had to really get over that, guys. Early on, I was really bad at it. That's why we say we're capital efficient. Spent the first 10 years really just trying to figure this industry out. We've built this entire brand on a couple of $1 million of raised capital. So going into a Reg A Plus for me was daunting, but we decided to take the challenge a couple of years ago, and we started it last year. Layering on top the Going Public show, to me, it was just natural. Number one, it helped me learn how to raise capital. I mean, we got interviews with billionaires. We did live pitches in Vegas, a lot of the things you're going to see in the show. And by the way, I failed pretty bad on those early ones. But it got me set up for conversations like this and others where I can be a lot more comfortable in my skin and feel that I'm bringing as much value to the relationship with the investor as they're bringing with me with the money. And to me, that's the win-win. I'm confident that raising the money now, that's not the victory. I really believe that's the start of a long-term relationship of success. And that's why we're doing it. And Going Public can highlight that attitude and how we're building Hammitt and really what we're looking to beyond this capital raise.
Tony, give us something from the show that like, I don't know if you want to say your favorite thing, but something that surprised you.
A show that surprised me. Meeting with the mentors surprised me. Each one brought different value. So like Jamie, and big reveal, I won't say, but she was amazing. I mean, she built a $1 billion brand, sold it. She sat down, and within 2 hours, we completely redid our website. As a matter of fact, you're going to see a completely new website than they're showing on the show because they'd already shot some scenes. You're going to see it. It's all both Jamie and then Jeff Hoffman, I think you guys had on recently. He is so laser focused. He sat down with us. Within an hour, it was just like, I love what he said to me. He said, Tony, what's the one thing that people buy a Hammitt handbag for? And I think I gave him like 7. He goes, no, what's the one? And I'm like, I don't know. He's like, well, you need to find that out. So we've really focused on that. After people invest, I call a couple a day, and I always I use Jeff. I'm like, hey, what's the one reason you decided to invest in Hammitt? And I always get different answers, but when you hear the same thing over and over again, that becomes the one. So
awesome. Tony Drockton is the chief cheerleader, it says it right there, of Hammitt, featured on the Going Public show. The links to which are in the description, in the chat, and on the screen. See, he's doing it right now. Tony, thanks for coming on today. Have a great rest of the day, and good luck in the fundraising process.
Thanks, Spencer. Thanks, Aaron. I love watching you guys. You're doing a great job.
All right.
Thanks
All
a
right.
lot.
Thank you, Tony. Have a great rest of your day.
Hey, so we're doing a great job.
That's nice.
That was so nice of him.
You know who else? Former President George W. Bush was a cheerleader.
What?
You didn't know that?
Is this like a punchline? Is this like a punchline to a joke? I
don't think so, unless I'm just wrong.
Wait. We got 2 minutes to go here on the show. We got a lot still to do. Some housekeeping items. We haven't done a crypto update. Oh no! It's red again every day with the stupid crypto. Oh, I love you, crypto, but I also am immensely frustrated by you. Bitcoin in the red, Ethereum in the red, Solana in the red. Hey, the 3 things that I own are down again. Cardano's looking not bad today. All right. Anyway, if you want some free Bitcoin, why wouldn't you want free Bitcoin? I don't know, frankly. It boggles the mind because everything is better when it's free. All you have to do is go to the Voyager app on your phone. If you don't have it, download it. Create an account, use the offer code ZING, Z-I-N-G, fund your account with $100 and make a trade, and they will send you $50 in Bitcoin for free. Again, that's Voyager. Check out the app there. Second thing I want to do is we haven't done a promo for the Super Bowl squares all week, Aaron. We've forgotten to do this. Aaron and I are going to scan the code on the screen.
We're going to the Super Bowl.
We're not going to the Super Bowl. Scan the code on the screen, that QR code. Enter the Quicken Loans Super Bowl sweepstakes contest, and maybe Aaron. Well, you will see Aaron and I in there as well. Enter to win $500,000 in prizes. Check it out. Last thing, again, I'm going to say it again. 4:00 today Eastern Time. A panel of experts on the Benzinga Cannabis Insider Show, talking about what the future holds for cannabis in the U.S. Stay tuned after the At the Close show, 4:00 Eastern Time today. Check it out. Benzinga or youtube.com/Benzinga. Now, we did not have time for trivia today. We did not have time for Guess That Chart today. We will do both of those tomorrow, I promise. But we got to go because it's time for the roadmap. So I guess goodbye. So long. And
love you guys.
We'll see you guys tomorrow.
Would you rather have $500 or 500 Bitcoin?
What kind of a question is that?
I don't know. I mean, I think if you ask the
500 Bitcoin or $500?
Yeah.
One Bitcoin is worth like $30,000.
I know, but you know that. I think if you go ask a lot of people on this, that's going to be the next man on the street segment. Because I think a lot of people would say $500.
Oh, man. All right. Man on the ice next time. That's what we're going to do. He's going to go on the ice rink and do it. Have a good one, everyone. Catch you later.